flood insurance program's long-term fiscal stability. And I would note that the current legislative proposal being circulated that we all saw, the Republicans saw for the first time when it became public, forgives $20 billion of that debt without any assurance or necessary reforms that give us some understanding that it wouldn't just pile back up again. I hope today's hearing will address the fundamental questions of what kind of flood insurance we want for the American people. An insurance program that is equipped with the tools it needs to perform its insurance functions, or should the flood insurance program just require annual appropriations? Those are the effective choices and everything in between. So how do we protect those in affected areas? How do we give them more and better options? How do we enable communities to get better maps, more effective mitigation? How do we protect the taxpayer? The time is right for reform and innovation. Private insurance, better technology, more mapping data, faster claims processing, and rethinking old underwriting models are just a few of the tools readily available for modernizing the flood insurance program. At the same time, we must also consider how we can use risk sharing to offload some of the NFIP burdens upon the taxpayer and the cost savings that come from spreading risk to other qualified, capable folks in the private sector that are willing to manage it. That is better for the taxpayer in most years, and over the long run would have dramatically assist and protect the taxpayer from larger losses. Building a more resilient and cost-effective NFIP are goals that would benefit all consumers. I look forward to the testimony from our colleagues. We'll hear from folks that are in disproportionately affected flood areas in the first panel. Then we'll hear from private sector and a variety of folks that have viewed this program intensely. And we'll have bipartisan questions about the effectiveness and efficiency of this program. But one thing we are committed to is to having an effective national flood insurance program, one that can weather the storm to ensure all impacted Americans and taxpayers are protected. I yield back.
Thank you very much. I am so very pleased. We have two panels today, but first we have a number of our colleagues who have requested time to share their perspective on the issue of national flood insurance and its reauthorization. To my colleagues, you're all most welcome to the committee, and each of you will have 5 minutes. And we will first hear from the gentleman from Wisconsin's Mr. Duffy. You're recognized for 5 minutes, Mr. Duffy.
Chair Waters, thank you for inviting me today. A very kind invitation. Republican Leader McHenry, thank you too. And to the committee as a whole. It's my first time sitting from this vantage point. You all look very good. It's a handsome, good-looking committee, I must say, if I do say so myself. I've been waiting for other witnesses to make that comment. They haven't yet, so I thought I would. This program is sick. We have problems in the flood insurance program, and Mr. McHenry addressed this, but we have 5.1 million policies in the program, in the NFIP, and the average premium cost is about $700. Now, last year, in 2018, we had revenue of $4.76 billion, $4.76 billion, but we had expenses of $11.4 billion. So we had a shortfall of $6.6 billion last year alone. And when we look at the debt, and I know the chairwoman wants to forgive the debt, and many of the panelists here want to forgive the debt, we were butting up against our $30 billion borrowing threshold, and we actually, as a Congress, forgave $16 billion of debt last year. And the chairwoman knows that we forgave $16 billion in debt. And when you look at the program and the reforms that are being proposed, how do we actually make the program a little more solvent? I don't know that we're going to get it to complete solvency, but how do we make the program work a little bit better? And I would agree with the chairwoman when in her plan she puts out ideas that we had worked together on in the last Congress on consumer choice and on competition, on reducing risk through mitigation, increasing ICC coverage, mapping fairness, which Mr. Lichtenmeyer has worked pretty aggressively on, improving the claims and appeals process. Those are all really important parts of making the program work better for people. But I also think we have to address these repetitive loss properties. They're 2% of the properties, but they account for 24% of the costs. 2% of the properties account for 24% of the costs. We got to address that. I want to talk about one part of this program in the reform side that I think is important. And I know the federal bank regulators came out with a rule, but trying to bring in the private sector to write flood insurance policies is incredibly important because we know that we have some properties that are subsidized. The premiums are subsidized by the federal government. But there's a whole other slew of properties that are paying rates that are above the actual cost of the property. And so if we let the private sector come in, they're going to cherry pick. And I know that Mr. Graves is going to talk about this in a second. They're going to cherry pick not low-risk properties and not take high-risk properties. They're not going to cherry pick that way. What they're going to do is the private insurance companies are going to come in and they're going to cherry pick the non-subsidized properties. They want a whole portfolio of risk, low risk, medium risk, high risk. They make more money on the high risk stuff, less money on the low risk stuff. They're going to take the non-subsidized properties. And the subsidized properties, they are not going to take. They can't compete with the government subsidy. And so if we allow the private sector to come in, what we're actually doing is helping people. We're helping people get a flood insurance policy at a lower rate. And why would we say, no, 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 we want to socialize, this program and say we want some people to pay more than they're required to pay based on their risk, and we want other people to pay less. I think if you could get a lower rate in the private sector, let's let you get a lower rate. And now some might say, well, the problem with that is we need that money because it's going to, that it helps with our debt burden. I look at the floods that hit our communities, and I'm sensitive to my colleagues on this panel and the communities from which they come and how important this program is to them, and we've got to make the program work for people. But when I look at again the private sector coming in and offering lower prices, when those storms hit, it's not just on the backs of the taxpayer. We defray that risk, not just taxpayers but also the private sector. And I think that's really important as we analyze this program. How do we bring in better pricing, better maps, better services, and try to bring us a little closer to a solvent program? And Madam Chair, we worked a lot on this. I look forward to working with you again. I hope I'll be a little more reasonable than you were with me. And I think we can come up with a 5-year reauthorization. Hopefully we get a 5-year authorization that works for people and they get certainty.
Thank you very much, Mr. Duffy. Mr. Graves, you're recognized for 5 minutes.
Thank you, Madam Chair. I appreciate the opportunity to be here and I appreciate the opportunity to work with you and Ranking Member McHenry on this. And I do want to thank my friend from Wisconsin for the hours and hours that he and I spent going round and round in this over the past few years trying to come up with solutions. Madam Chair, I really, you can look at what we've been doing with flood insurance. We've been repeatedly kicking the can down the road. And the reason for that is that we can't come to consensus on what the right approach is. We have Democrats on look a lot smaller, doesn't it? That was just in 2017. If you actually take a step further back, dating back to 1980, we've had 215 disasters that have cost over $1 billion each. 215, we've spent $1.5 trillion. All of a sudden, $36 billion looks pretty small. Again, $1.5 trillion we've spent on these disasters. So on the one hand, my friends that are to the left geographically, I agree with you on let's be fiscal conservatives. Let's make the right approach and not sit here and spend money hand over fist. To my friends on the right, I agree with you that we need to make this program accessible and affordable. But the solution is different than I think we're pursuing myopically under flood insurance reform. You can look at study after study. Congressional Budget Office says you get $3 in cost savings for every $1 you invest in proactive mitigation. An updated study says $4. Corps of Engineers says $7.90. There are other studies that get up to $11 or $12, and my favorite. General Russell Honore, who came in after Hurricane Katrina and really wrestled the federal government's response, came in and said, you know what? He was giving this great talk I was listening to, and he went through all these different numbers about the $3 and the $4 and the $7, and he said, and there's another study that says it's $16, but he didn't cite it. And I went up to him after, I'm like, oh my gosh, $16 in cost savings for every $1 you invest? That's incredible. And so I said, General, that was awesome. Where'd you get it? I knew the number was higher. And he looks around, he goes, I made that shit up. But I believe it. And you know what? He's right. If we make, can I say that? If we make the right proactive investments, we can get those types of cost savings. So we've got to stop focusing myopically on just flood insurance. We've got to look at the larger resilience. You know, there's $100 billion in authorized projects through the Corps of Engineers, and we're providing about $1 billion to $1.5 billion annually for construction. We'll finish it approximately never. That's our resilience projects. It's a broken system. We've got to stop just looking at flood insurance and bringing that to the table. It's defense. We've got to bring an offense to the table as well, and that's proactive investments in mitigation. That is where the solution is. Integrating our defense and our offense and stop this strategy of just being reactive. Keep in mind, you then save lives. You prevent this economic disruption that happens whenever we have these massive storms and disasters. So, Madam Chair, and wrapping up this morning, I just typed up about 10 or 11 different things that I think y'all should be considering as you move forward on legislating. Number one, as I said, we can't look at just the balance or the debt of the NFIP in a vacuum. There's a larger liability issue. We're spending $1.5 trillion since 1980 on disasters. Number two, we've got to have better oversight of the costs and the fees absorbed by non-claims. There was and I know this is controversial, and my friend here gets mad at me when I reference this, but there's a GAO study, it's a bit dated, that indicates that in some cases, up to 2/3 of the premiums have been retained by the writer owns. Up to 2/3. Again, it's not my statistic, it's GAO. Well, if 2/3 are being retained, no wonder the program's insolvent. Number three, the uptake rate. Once again, I know there's controversial figures, but let me throw out some numbers. Do you know that in our August 2016 flood in South Louisiana, only about 20% of the people had flood insurance? You know who got help? Almost all of them. So the
phone could go next. Mr. Lucamari has a hearing that he has to conduct right now, so I would appreciate your cooperation without objection, such as the order. Thank you. Mr. Pallone, you have 5 minutes.
Thank you, Madam Chair. And I also want to thank our ranking member and distinguished colleagues who serve on this committee for holding this hearing. For more than 50 years, communities and millions of individuals across the country have depended on the NFIP to help them recover from their darkest hours. And in 2012, Hurricane Sandy brought devastation to my district in New Jersey. We were the hardest hit, if you will, by Sandy of any district in the tri-state area. And the NFIP provided financial protection from my Jersey Shore constituents. However, such a large-scale and damaging event also revealed a number of program flaws that prolonged hardship for policyholders and cost taxpayers. And that pattern has been repeated in the years since during other major storms, including Harvey, Irma, and Florence. The NFIP is nationally significant to ensuring our nation can manage the costs of catastrophic flooding, but aspects of the program can and must be improved. And I think the time is now to advance viable solutions that will enhance this important program. Ensuring a strong NFIP helps families quickly get back on their feet post-disaster and is of great importance. For these reasons, in the 115th Congress, Congressman Clay Higgins of Louisiana and I introduced H.R. 3285, the Sustainable, Affordable, Fair, and Efficient or SAFE NFIP Reauthorization Act. And this bipartisan bill seeks to improve program effectiveness and reduce unnecessary costs. So I'm asking you to bring to the committee's attention briefly to support the measures contained within our SAFE NFIP Act as part of any future action you take on this program. First, I ask that you support a long-term reauthorization for at least 6 years. The NFIP has continued through numerous short-term extensions, and of course, when you kick the can down the road, a long-term authorization seems less possible. But if you have a long-term reauthorization, I think it provides financial certainty and avoids the significant impacts on our economy that are caused by lapses in the program. I also ask the committee support reforms to increase the affordability of NFIP for households. And this can be done by expanding coverage and protecting ratepayers from excessive rate hikes by capping annual premium increases by 10%. We've seen, as you know, much larger increases than that. The NFIP should also offer means-tested flood mitigation and affordability assistance. Additionally, the administrator and FEMA should conduct a study on offering insurance coverage for small businesses. These changes would be welcomed by hardworking families and entrepreneurs within my district and around the country. The committee can provide flood preparedness by proactively reinvesting in mitigation efforts. And I really want to stress the mitigation efforts, which would really make such a difference in future storms. According to the U.S. Global Change Research Program, flood and extreme storm events are increasingly happening and also more severe. And there's also rising sea levels because of climate change. The reality of climate change is hitting home, and changes to NFIP are necessary to ensure communities can thrive in the future. So the flood mitigation efforts have a minimum of 4-to-1 return on investment, with some projects enjoying even a 5-to-1 return on 54-to-1 return on investments. The average is 4.1. Expansion and improved effectiveness of the increased cost of compliance and other mitigation provisions should be part of any legislative action. And lastly, Madam Chair, smart changes to the NFIP would keep more dollars in taxpayers' wallets. Under the current system, it's too easy for private companies to pad their profits with money that should flow to disaster-struck families or stay with taxpayers. During Sandy, my constituents turned to write your own companies for help with property damage, and only to have these egregious actors that were involved in that company knowingly undervalue their claims using falsified engineering reports. And so I urge the committee to take concrete steps to eliminate the fraud and abuse. And this can be done by capping the compensation of write-your-own companies, as well as ensuring that the private market pays its fair share for the development and use of flood insurance, rate maps, and other products. The committee must ensure policyholders and taxpayers are not taken advantage of, and I'm sure all of you heard all the reports in the media about the fraud and abuse in Sandy and otherwise. So let me just thank you again. I hope you'll consider the path forward that I and others have outlined, because I think these changes will create the certainty and accountability and efficiency that the program needs. Thank you, Madam Chair.
Thank you very much. And now we will hear from the gentleman, Mr. Lukemeyer. Mr. Lukemeyer, you will be recognized for 5 minutes.
Thank you, Chairman Waters and Ranking Member McHenry. Representing a district that touches the Mississippi River, the Missouri River, and the Lake of the Ozarks, flood insurance is a critical issue for my constituents. And I'll point out, Madam Chair, that the Lake of the Ozarks has 1,150 miles of shoreline. That is more miles of shoreline than in your state of California. So my flood insurance problem potentially is even bigger than your entire state. However, as we all know, flood insurance reauthorization is a difficult issue. The National Flood Insurance Program, NFIP, as it operates today, has numerous problems Congress and this committee must work to address. Since the end of fiscal year 2017, the program has received a short-term authorization 10 times. We can all agree this committee can and should come together in a bipartisan manner to support a long-term reauthorization that will solve some of the systemic issues facing NFIP. First and foremost, I believe we must take into account the impact this program has on the American taxpayer. Despite Congress forgiving $16 billion of debt in 2017, today the debt at NFIP is over $20 billion. The future solvency of the NFIP needs to be addressed in any legislation this committee considers. As a committee with oversight of the NFIP, reauthorizing this program with taxpayers still on the hook is bad policy and short-sighted. Simply forgiving the debt NFIP holds is equally irresponsible and does not solve the root causes of the NFIP's insolvency. One area that should help with the program's solvency is reinsurance. In 2017, FEMA purchased a reinsurance policy worth over $1 billion at a premium of $150 million, saving taxpayers nearly $1 billion. In 2018 and 2019, FEMA transferred nearly $4 billion of risk off their books. It is clear that the risk transferring efforts of FEMA are working, which is why I introduced legislation at the beginning of this Congress to require the FEMA administrator to annually cede a portion of the NFIP's risk to the private reinsurance or capital markets in order to maintain the program's ability to pay claims and limit exposure to flood loss. The committee should examine similar provisions in their discussion on flood insurance to protect the taxpayers and ensure the solvency of an NFIP for generations to come. Another issue the committee should consider is replacement costs. Currently, FEMA does not consider the replacement cost of a structure when it determines NFIP premiums. Instead, the NFIP uses a fixed national average for replacement costs in its calculation for premiums. This means lower-income policyholders are subsidizing wealthier homeowners within NFIP. In response to this, I've introduced legislation to require the NFIP to incorporate the replacement cost of a structure in the calculation for premiums. Low-income Americans should not be required to foot the bill for the flood insurance premium of wealthier individuals. Thirdly, I would like to discuss continuous coverage. In 2012, Congress passed the Bigger Waters Flood Insurance Reform Act. It reauthorized NFIP to include a provision to allow private flood insurance to fulfill the NFIP requirement. However, if a policyholder wishes to try a private flood policy, they must sacrifice their status in the NFIP. Just this week, Representative Castor from Florida and myself introduced legislation that would allow policyholders to maintain continuous coverage in NFIP even if they test out the private market. This provision will give policyholders the freedom to choose the best flood policy insurance option for themselves and protect them if they decide the NFIP is their best option. And lastly, mapping. I've introduced the Community Mapping Bill, which is unfortunately necessary because FEMA is notorious for the lack of timeliness in updating their maps. What my bill will allow them to do is the local community, a local subdivision, will be able to have their own third-party mapping under certain standards, be able to be done and approved by FEMA within 30 days to allow local folks to take advantages of any sort of change in the demography and topography of whatever is going on with regards to their area to either minimize what they've done to minimize some of the flood damage that's possible. In closing, I would like to thank the chairwoman and ranking member for holding this important hearing. I believe this committee can and should make some of the common sense changes that I presented here today. These provisions will improve the NFIP, getting taxpayers off the hook and provide more choices for policyholders. I think it's imperative we do this. Kicking the can down the road without change is totally irresponsible. I look forward to having a healthy debate on this issue in the weeks to come and yield back the balance of my time.
Thank you, Mr. Lukemeyer. Next, we will hear from the gentleman from New Jersey, Mr. Pascrell. Mr. Pascrell, you are well recognized for 5 minutes.
Thank you, Chairwoman Maxine Waters, Ranking Member Patrick McHenry, for holding today's hearing on the importance of reauthorizing the National Flood Insurance Program. We have not made major changes to the NFIP since Hurricane Sandy deeply affected many in my district and my state. I remember touring the devastation like it was yesterday. Homes damaged, businesses destroyed, the mold, the sand, the debris. More than the physical destruction, I was struck by the storm's human toll. I spoke with my constituents who saw their entire lives swept away in an instant. I vowed never to stop fighting for them. Now, I've been here with Congressman Pallone and Senator Menendez for a long run. We introduced bipartisan, bicameral legislation as last Congress to build on our commitment. The SAFE NFIP Act, H.R. 3285, proposed changes to the NFIP based on lessons we learned in Sandy. Our bill helps people prepare prior to a storm with accurate maps, flood prevention investments, updates the claims process so survivors get what they need to rebuild, and holds bad actors accountable. Today, I'd like to highlight a few sections of the bill. A constituent of mine, Mabel Richardson, brought my attention to the fact that my hometown of Paterson, New Jersey, did not have accurate maps, causing her home to be in a flood zone. She was forced into the flood insurance program, forced to pay thousands each year in premiums. But her home was not actually in a flood-prone area. So I worked with Mabel and FEMA to learn that decades-old, hand-drawn maps were used to design the maps in the first place. While I worked with FEMA to change the maps, this is wrong. They should have been accurate from day one. Section 204 of our bill invests $800 million per year for 6 years in state-of-the-art technology to map the entire country. Meanwhile, the claims process was screwed up from the very start. One example is that people fled their homes for several days, if not weeks, in Sandy's aftermath. They lived in hotels, cars, motels. Family was elsewhere at times, wherever they could find shelter. During this time, mold grew because several feet of water lingered in the homes they left behind. These individuals filed damage claims, but adjusters told them they were irresponsible they weren't responsible for failing, or they were responsible for failing to maintain the property after a flood. Figure that out. It is offensive to tell someone worried about their immediate safety that they should have gone back to their home to prevent some damage. Section 403 of our bill clarifies this mold damage issue for survivors in the aftermath of a storm. Worse, my constituents were told they could appeal any decision 90 days after submitting a claim, but the median response time for FEMA was 88 days. Section 404, Section 405 of our bill extends the appeal deadline, creates a deadline for FEMA to respond. These are just some of the many claims process reforms we made in Title IV of the legislation. We know bad actors cause headaches and waste taxpayers' funds. I heard stories about survivors being lowballed by insurance companies to be paid just pennies on the dollar. Congress investigated and FEMA and reopened the claims process in 2015. This investigation uncovered vast systemic fraud and abuse. FEMA was forced to grant Sandy victims an additional $260 million they were entitled to. If done right, initially, it would have saved taxpayers millions from defending lawsuits and reopening the programs. Write-your-own companies that intentionally underpaid policyholder claims were particularly egregious. Currently, there is a perverse incentive to underplay claims, which they did to no one's surprise. Section 407 of the bill makes these companies financially responsible to this event, and Section 302 caps their compensation to hold them accountable. As the committee considers reforms to NFIP and expanding the private flood market, please consider the lessons that we experienced. The financial incentive favors profit, not people. We cannot let this happen. I understand several of these issues are addressed in the legislation being considered. I thank you for the hearing. I thank both of you for putting us together today. Thank you, Madam Chair.
Thank you very much. We will finally hear from the gentleman from Louisiana, Mr. Scalise. The distinguished minority whip, Mr. Scalise, you will be recognized for 5 minutes.
Thank you, Chairwoman Waters and Ranking Member McHenry and other members of the committee for the opportunity to talk about the reauthorization of the National Flood Insurance Program. With over 5 million policies nationwide, NFIP is the sole provider of flood insurance for the vast majority of families and small businesses across our country. I applaud the committee for moving early in this Congress on legislation to provide a long-term reauthorization of the program, and I really hope we can all work together toward a strong bipartisan bill that gives homeowners certainty instead of continuing on the path of short-term extensions that the program has experienced since October of 2017. As we've seen time and time again, wherever there's the possibility of rain, there's the possibility of flooding. While the most catastrophic floods are the ones that get the most media attention, it's not just coastal areas like mine in southeast Louisiana that are vulnerable to flooding. Just in the past 5 years, every one of our 50 states has experienced a flood event. As a matter of fact, 38 states had a flood event large enough that they warranted a federal disaster declaration. Since 1956, there have been 15 states that experienced more than 50 federally declared disasters, including Missouri, Kentucky, and Oklahoma, all states that are very far from the coast. I've long believed that NFIP is not and should not be a partisan issue. While there are many parts of the NFIP that are needing reform, one of the biggest challenges we face is how to ensure the program remains affordable and stable into the future, while also limiting the financial exposure to taxpayers. On affordability, it's important to keep in mind that if NFIP is unaffordable, some people will simply drop their flood insurance altogether, which further straps the program and leaves taxpayers more exposed after major storms. We must protect the grandfathering that currently exists in the program so that homeowners don't see unfair and massive rate spikes that destroy housing markets in whole communities. Also, we have to ensure that everyone who's required to have flood insurance actually has the ability to get it. I've always believed that we should incentivize more people to carry flood insurance, not create a system where people drop their insurance because they can no longer afford it. There's certain irony about the way the federal government handles flood disasters. When you look at past disasters, whether it's Hurricane Katrina, Superstorm Sandy, the 2015 South Carolina floods, or Hurricane Harvey, Congress has passed supplemental appropriations bills totaling billions of dollars for recovery. And a lot of those recovery dollars go to rebuilding uninsured properties. In the 2015 South Carolina floods, for example, the average NFIP coverage rate in counties with a federal disaster declaration was 5%. For Hurricane Harvey, the percentage of people that carried flood insurance was only 10%. Of course, we came in, the federal government, and passed supplemental appropriations bills to make sure that everybody was made whole. So if only 10% of the people had flood insurance, the NFIP paid those policies, but the taxpayer paid the other 90%. And so when we talk about the debt of the program, let's keep in mind, in the major disasters that have been declared that I talked about, whether it's Harvey or Katrina or Superstorm Sandy, the federal taxpayers came in and ultimately paid for the people who had no flood insurance. And the only side that's talked about is the side on NFIP, the people that actually paid into a program. While some people call for the dismantling of NFIP, from a taxpayer perspective, what makes more sense is to work on policies that will encourage the creation of a private marketplace for families to buy flood insurance. Currently, there are no other options outside of NFIP, and dismantling NFIP will only serve to increase the rate of uninsured properties and therefore increase the exposure to taxpayers in the event of a federally declared flood disaster. I was very pleased to see the banking regulators earlier this year clarify that private insurance coverage must be accepted by financial institutions to meet flood insurance requirements. In doing this, hopefully we'll start to see a private marketplace develop for flood insurance. This has been something that many of us have been deeply committed to, and I hope that the bill that the committee will ultimately pass strengthens the ability for the private marketplace to start offering flood insurance across the country while also protecting policyholders. Finally, while this point was one of the most contentious last Congress, I hope the committee considers addressing extreme repetitive loss properties that experience very regular flooding events. While any changes to rates and participation in the NFIP must be fair and transparent for the homeowner, I would encourage the committee to look at responsible and realistic changes to how the program deals with those properties that experience very regular flooding and rack up multiple claims that far exceed the value of the property, whether that's through additional mitigation or offers to buyouts or other changes. Again, I want to thank the committee for the opportunity to testify and talk about the importance of a long-term reauthorization of the flood insurance program. Look forward to working with you all as we achieve what I think we all are setting out to do, and that is a program that is fair for ratepayers and for taxpayers with long-term certainty. Thank you, Madam Chair.
Thank you. Thank you. Thank you all for being here. I appreciate the time that you have spent and your critical perspective. Thank you very much. We will move to set up our second panel. Those participants on the second panel, if you will come forward as soon as our members exit. I want to welcome today's distinguished panel. Maria Cox Lamb, South Carolina Department of Natural Resources, on behalf of the Association of State Floodplain Managers. Mr. Christopher Heydrich and Company Insurance and Risk Management Services, LLC, on behalf of the Independent Agents, Insurers, and Brokers of America. Velma Smith, Senior Officer, the Pew Charitable. Ms. Mabel Guzman, Broker, Properties, on behalf of the National Association of Realtors. Colin O'Mara, President and CEO, National Wildlife Federation, on behalf of the Smarter Safe Coalition. Mr. Raymond J. Lehman, Director of Finance, Insurance, and Trade Policy at the Street Institute. Each of you will have 5 minutes to summarize your testimony. When you have 1 minute remaining, a yellow light will appear. At that time, I would ask you to wrap up your testimony so we can be respectful of both the witnesses and committee members' time. So, Ms. Lamb, you are now recognized for 5 minutes to present your oral testimony.
Thank you, Chairwoman Waters, Ranking Member McHenry, and members of the committee for holding this important hearing and inviting the Association of State Floodplain Managers to testify. I am Maria Cox Lamb, South Carolina State NFIP Coordinator and Chair of ASFPM. As we all know, floods are costly natural disasters. In fact, they are the nation's most costly natural disaster, and unfortunately, the trends are worsening. The NFIP takes a comprehensive approach to managing the nation's flood losses by balancing floodplain management, mapping, mitigation, and insurance. At the end of 2018, the NFIP had paid over $69 billion in claims. Half of that's come in the past 10 years. Also, the NFIP has mapped 1.2 million miles of streams, rivers, and coastlines. It has invested more than $1.3 billion in flood hazard mitigation for older at-risk structures. Because of the program, over 22,000 communities have adopted local flood risk reduction standards, which have resulted in $1.9 billion of flood losses reduced every year. However, there is more to be done to prepare us for the future. While improvements can always be of benefit to the NFIP, it is important to ensure that the strength of all 4 of the programs, with our written testimony, offers 20 recommendations for strengthening the NFIP. For the balance of my testimony, I want to highlight 4 of the areas outlined by ASFPM. First is to reaffirm your commitment to and enhance the flood mapping program. Today, about 1/3 of the country has flood risk maps available. The problem is the priorities of the mapping program to date have been to map at-risk areas. As a result, mapping never gets ahead of development. I have personally seen the impact of this policy. I've heard from many local floodplain managers, citizens, developers, and elected officials that they wish they had known the true flood risk of an area before making decisions and huge investments. Many residual risk areas are just simply not mapped, and some mapping information is not publicly available. We must do better, and we need your help. Second is to strengthen the Community Assistance Program by officially authorizing that program. The program provides fundings to states to provide subject matter experts for NFIP participating communities through the State Coordinating Office. For the past 4 years, South Carolina has experienced devastating flooding. My staff and I, through the CAP program, are helping impacted communities through the long process of recovery. The level of assistance we've been able to provide is a direct result of the funding provided by the CAP program. Third, reducing risk through mitigation. One of FEMA's built-in mitigation programs is increased cost of compliance. As I have seen in South Carolina, ICC funding is extremely valuable to the recovery process. However, the maximum funding limit of $30,000 does not come close to the average cost to mitigate a structure from flooding. ICC should be expanded in application and scope, including raising the maximum ICC amount to $60,000 and clarifying that it is available in addition to the maximum claim amount. Finally, reforms are needed related to private flood insurance, and they should be focused on ensuring that other elements of the NFIP are not weakened. First, all private flood policies sold that meet the mandatory purchase requirement must include an equivalency fee, which is equal to the federal policy fee on NFIP policies. Currently, this fee pays for 100% of floodplain management and roughly 40% of mapping. If the NFIP ultimately loses policies due to private sector competition, then there will be fewer resources to help communities and states with floodplain management and mapping efforts. Second is a requirement that private flood insurance policies meeting the mandatory purchase requirement only be sold in NFIP participating communities. Currently, Most communities in the country participate in the NFIP because our members have enrolled nearly all of the 22,000 communities in the NFIP. We uniquely understand the reasons for joining is accessibility to flood insurance. ASFPM fears that if the private flood insurance is available with no requirement to join the NFIP and subsequently adopt local codes, small communities and those with low policy counts in particular will begin to drop out of the program. We are very pleased the committee has developed 4 discussion draft bills. ASFPM is supportive of many provisions in these bills, and we continue to review and analyze them. Our initial comments are included towards the end of our written testimony. Thank you for listening to our concerns, and we're happy to answer any questions.
Thank you very much, Ms. Lamb. Mr. Heydrich, you are now recognized for 5 minutes to present your oral testimony.
Good morning, Chairwoman Waters, Ranking Member McHenry, and members of the committee. My name is Chris Heydrich, and I am pleased to be here today on behalf of the Independent Insurance Agents and Brokers of America, or the Big I, to present the Association's perspectives on flood insurance and the NFIP. We commend the committee for looking at this very important issue, and we look forward to working we appreciate the work you've done so far on the draft bills that were released last week. I'm the owner of an independent insurance agency located in Sanibel, Florida. I regularly counsel homeowners and small businesses regarding flood insurance. I also hold the designation of Associate in National Flood Insurance and currently serve as the chairman of the Big I Flood Insurance Task Force and chairman of the Flood Insurance Producers National Committee, which is an organization that provides technical assistance and advice on NFIP operations. The Big I is the nation's oldest and largest trade association of independent insurance agents and brokers, representing more than 25,000 agency locations across the country. Working with write-your-own companies, many of these agents serve as the sales force of the NFIP. It's from this vantage point that Big I members understand the capabilities and challenges of the insurance market when it comes to insuring against flood risks. My written and oral testimony today focuses on 3 points. 1, the need to reauthorize the NFIP on a long-term basis before the program expires on May 31st. 2, the need to increase take-up rates for flood insurance, whether through the NFIP or the private market, to better ensure Americans can get back on their feet as quickly as possible after a disaster strikes. And 3, the need to modernize and simplify the NFIP to make the program more transparent and understandable for consumers. While there are several other important issues impacting the NFIP, such as increasing support for mitigation and ensuring strong floodplain management standards, my colleagues on this panel hold expertise in this area. As I am the only witness on the panel from the insurance sector, I will focus my statements today on insurance-specific issues. Most recently, on December 21st, Congress acted to extend the NFIP through May 31st of this year so the program could continue to operate during the recent partial government shutdown. In doing so, Congress recognized the critical role the NFIP plays in the U.S. housing market and the overall economy. As such, the Big I urges Congress to yet again extend the program as soon as possible, but before it expires on May 31st, to avoid any unnecessary economic disruption. While it is important that the NFIP does not lapse, the Big I also encourages Congress to work together to pass a true long-term reauthorization of the program as quickly as possible. The public instability and uncertainty created by continual short-term extensions causes economic damages and hinders the ability of the NFIP to help policyholders while also undermining consumer confidence in the program. Flooding is the most common and costly natural disaster, and yet most property owners do not have flood insurance. As such, the Big I encourages Congress to consider policies that would help Americans to obtain flood insurance coverage, and this includes not only flooding caused by hurricanes and coastal events, but also inland flooding. A significant portion of flooding occurs outside of the perceived high-risk areas, and put simply, where it rains, it can flood. While the NFIP has its faults, it is a vital program and is the primary source of flood insurance for U.S. property owners. Historically, flooding has been a difficult risk to underwrite in the private market. However, advances in modeling and underwriting technology have contributed to some market growth in recent years. Yet to date, the private insurance market still only covers a small portion of flood risk nationally. Therefore, it is important that that we continue along with the NFIP, and we also have an expanded private market to increase flood coverage for the country, because an insured survivor recovers more quickly and fully. Specifically, the Big I urges Congress to consider modest policy changes that would help protect consumers and give them more choices, such as clarifying that private flood insurance can satisfy the continuous coverage requirements. This is an important consumer protection and an affordability measure to ensure that homeowners are not unfairly penalized and with increased insurance rates. And earlier this week, Representative Castor and Representative Lukemeyer introduced legislation on continuous coverage, and I thank them for that. The Big I also offers additional policy suggestions in our written testimony. Finally, the Big I encourages Congress to work constructively with FEMA on innovative approaches to modernizing the program, including ongoing efforts to change how the NFIP underwrites policies. In conclusion, the Big I supports a long-term reauthorization of a modernized and transparent NFIP that would increase take-up rates for flood insurance and calls on Congress to extend the NFIP before it expires. I thank the committee for holding this hearing and look forward to any questions.
Thank you very much, Mr. Heydrich. Ms. Smith, you are now recognized for 5 minutes to present your oral testimony.
Good morning, Madam Chair, members of the committee. My name is Velma Smith. On behalf of the, I'm sorry. On behalf of the Pew Charitable Trust Flood Prepared Communities Initiative, I thank you. A special thanks for
If the witness would actually point the microphone at you so we can.
I'm sorry.
Yeah, actually.
Technology.
Yeah, there we go.
Challenge.
There we go. Thank you.
I begin by thanking you, Madam Chair, for getting the ball rolling for an on-time, full reauthorization of the NFIP, an essential component of our nation's flood risk management. We support your effort to find the right balance for the NFIP's dual objectives of insurance and floodplain management. First, flood maps are central to the NFIP, helping all Americans, not just policyholders. We believe Congress must help the many communities that still lack modern maps. Investment in new technologies is a worthy goal, but even more importantly, we need good maps everywhere, not perfect maps here and there. Ultimately, flood maps, however, cannot tell us all we need to know. Thus, we support a national framework for flood risk disclosure, a Carfax for flooding, if you will. Lack of awareness can have devastating consequences, but upfront disclosures about flood risk made before financial commitments can help consumers make smart decisions. We were delighted to find broad agreement on this issue with the Association of Realtors and look forward to working with the committee on this issue. On the difficult issues of rates and affordability, to the extent that Congress offers new relief to policyholders, yet leaves the structure of the program alone, it may unintentionally increase the current financial shortfall and eventually threaten the program's ability to pay claims. Yet we know also that to the extent that rates are perceived as too high, lower risk policyholders may drop coverage, thereby increasing the pressure to raise rates on others. Our recommendation then, carefully target any affordability program. An overly generous program without changes will simply hasten the date by which Congress will be asked to forgive additional loans. Also, any rate relief must compensate for the price signals that new discounts convey. Congress should be certain to provide clear risk information. An affordability program should not feed flood complacency. We recommend beginning the difficult but important triage of the program's financial ailments, starting perhaps by addressing repeatedly flooded properties, not just one house at a time, but as broader areas in need of mitigation assistance. The subset of properties that flood over and over again has strained the program's finances. But with the new mitigation investment in the chair's bill, we are hopeful that a repeatedly flooded area program could be linked to technical assistance and ample resources for participating communities. In the long run, an area-wide approach could accomplish much more than might be done by taking on the nation's flood problems one house and one flood at a time. We celebrate the chair's support of a mitigation state revolving fund program, loan fund program, for we believe that pre-flood preparation has been the missing piece in the NFIP puzzle. Existing mitigation programs are small and cannot pay of themselves make the dramatic change we need in the trajectory of the program's finances. A revolving loan fund program could be the game changer. As the experts tell us, pre-flood mitigation can save, on average, $6 for every dollar spent. In closing, let me say that our organization looks forward to working with all the members of the committee to support a good on-time reauthorization to keep flood insurance available to those who need it without asking taxpayers to subsidize risky development, to help drive new development away from flood-prone areas, to foster fixes or buyout of problem areas, to promote careful consideration of future risk, and ultimately to make the nation better prepared for tomorrow's severe storms. I look forward to the committee's questions. Thank you.
Thank you very much, Ms. Smith. Ms. Guzman, you are now recognized for 5 minutes to present your oral testimony.
Thank you. Good morning, Chairman Waters, Ranking Member McHenry, and members of the committee. On behalf of the 1.3 million members of the National Association of Realtors, thank you for the invitation to testify regarding draft legislation to reauthorize and reform the National Flood Insurance Program. My name is Mabel Guzman, and I'm a realtor for App Properties in the city of Chicago, and I've been a realtor for 21 years. Realtors thank this committee for its continued leadership on long-term reauthorization and reform. Many provisions of the draft legislation will provide critical reforms to flood mapping and mitigation. NAR urges the committee to work together and build on these provisions and remove barriers to private flood insurance and develop bipartisan reauthorization package. Floods are getting worse, and recently the United States has experienced several record-breaking hurricane seasons in a row and witnessed the total destruction of places like Mexico Beach and most of Puerto Rico. I personally have family in Houston, in Florida, and in Puerto Rico who recently went through those hurricanes. What they had to experience, we would not wish on anyone. Like my cousin's daughter who lived without water. And luckily the neighbor who had collected water in his pool allowed her to draw from that pool so they can boil water to drink, to bathe, and to flush toilets. And this is not a coastal issue. We saw in Houston last year roughly half of the declarations for flood occurred in landlocked states. In the past year alone, disasters were declared in Kentucky, Indiana, Michigan, Wisconsin, Minnesota, and Montana. And in my hometown of Chicago, for instance, we've struggled with flooding due to heavy rainfall. And according to the Illinois Department of Natural Resources, 90% of the damage claims were for locations outside the mapped 100-year floodplain, highlighting the degree to which floodplain maps have become out of date and no longer accurately reflect the risk communities face. Realtors are encouraging people to buy flood insurance, even when it's not required. I recently told clients interested in purchasing foreclosed properties to purchase flood insurance because banks are excluded from disclosure laws that realtors are required to follow. Additionally, we recommend mitigation because for every dollar spent in mitigation saves $6, simply because you never know when it's going to happen. While realtors are not risk experts, we are trying to do our part to close the insurance gap, so we have signed a memorandum of agreement with FEMA, and we are working together to educate consumers about the importance of considering flood insurance no matter where they live. National Flood Insurance Program is central to U.S. disaster preparedness efforts and essential to completing 500,000 homeowner sales per year. As essential as the program is, this 50-year-old program was cutting edge 50 years ago. Today it has borrowed $40 billion and is not working for policyholders or taxpayers. We need to modernize the program to work in today's realities. NAR supports extending the NFIP, and we also must have meaningful reforms. To reauthorize and do nothing will not help with inaccurate maps, unfair insurance rates, or the lack of resources for property owners to reduce their risk. We support provisions in the bill. Reauthorize NFIP through 2024. Include bipartisan mapping and mitigation. Modernize mapping for better risk assessment. Low-interest mitigation loans. We also encourage opening doors for private flood insurance. Ensure consumers are charged fair rates and enhance affordability through mitigation. And please clarify that FHA is subject to mandatory acceptance of private flood insurance. Having a competitive environment gives consumers good options. Yes to reauthorize, and yes to reform. Because to do nothing, we already can see the consequences. It's not only a loss of property, it is a loss of life. Thank you very much for the opportunity to testify today, and I look forward to answering your questions.
Thank you, Ms. Guzman. Ms. Delmara, you are now recognized for 5 minutes to present your testimony.
Chairman Waters, Mr. McHenry, thank you for the opportunity to be with all of you today. My name's Colin O'Mara. I'm the head of the National Wildlife Federation and a member of the Smarter, Safer Coalition. The National Wildlife Federation is America's largest wildlife conservation organization with 6 million members, including in all of your states and districts. But we're also a member of the Smarter, Safer Coalition, which is for more than a decade has advocated for reform of the National Flood Insurance Program to ensure the program is smarter and safer for those in harm's way, for the environment, as well as for taxpayers. I had an old mentor that used to talk about flooding is natural, but disasters are man-made. And he was mostly right. And we have to be honest about the conversation we're having today, which is that the perverse incentives created through this program, through the subsidized rates, have put people in harm's way and made some of the disasters we've seen the last few years more extreme because communities have kind of encroached in more and more risky areas. What I think my old mentor didn't anticipate was that the acceleration of risk would get so much worse. And whether it's, Hurricane Irene, Hurricane Sandy, Hurricane Maria, Hurricane Harvey, Hurricane Florence, Hurricane Michael, in just the past 3 years, we've had $450 billion worth of damage. And you've all been asked to vote on supplementals for billions of dollars, which are dramatically more money than we've spent on mitigation over the past 50 years. Our failure to act on climate is only accelerating and exacerbating these problems. And it's a double whammy. So we're encouraging folks to move into harm's way because we're subsidizing the true cost. And at the same time, we're destroying the natural resources, the wetlands, the dunes, the forests in some cases, that act as natural barriers to protect those communities. So in my state of Delaware, for example, if you develop on a wetland, you're going to destroy between 300,000 and 1 million gallons of storage capacity for water, that all of a sudden there's asphalt, that water is going to go somewhere else, into the neighbor's yard. And by not having that capacity, as we saw in Houston and other places, all of a sudden these disasters become much worse. So given this new reality, this conversation that the chairwoman is leading is incredibly important. And this can't just be one of those kind of typical reauthorization conversations like we have, because a vote for a short-term extension is really a vote to exacerbate the tragedies that we're facing. So we really want to make sure that we can't afford to perpetuate the status quo through just a short-term extension without meaningful reforms, or only modest reforms. And we need to make sure we're protecting these vulnerable frontline communities that are facing unacceptable levels of risk. So to better protect people and natural systems, I want to highlight 4 priority reforms as part of reauthorization. First, we have to invest in more accurate maps. And this includes property-level data. And we're supportive of a lot of the measures, and we think we can even go further within the draft bill. But the property-level data is incredibly important because that's where we're seeing a lot of the debates take place for whether folks are in or out of requirements. Second, we must provide people and communities more choice in insurance options. And we have to make sure the risks are more transparent. That people need to fully understand the risks they face so they can take steps to actually protect themselves against the potential flooding or hurricane damage. Access to information and full transparency is absolutely essential. And frankly, there's no state that's doing this better in the country right now than Mr. McHenry's state of North Carolina, where folks can go online and get a whole range of information and steps they can take to save actuarial costs and really have that information to make good decisions for themselves and their family. Third, for those that can afford it, we need to ensure that rates do reflect the full risk over time. And at the same time, we need to make sure that affordability concerns, particularly for vulnerable frontline communities, is an absolute priority, and that we target incentives for those communities that absolutely need the assistance to make sure we're not creating additional victimization of communities that for too long have been forgotten. And then most importantly, we need to invest much greater commitment in resilience, especially for disadvantaged communities. We need to invest in mitigation. As all my panelists have said, every dollar we spend is going to save between $6 and $10 of avoided damage later. We are being incredibly penny wise and pound foolish in this debate because we're seeing the damage that we're paying for with the supplementals you're all asking me to vote on. So let me just close with one quick story. I was the Secretary of Natural Resources in Delaware during Hurricane Sandy. And it was absolutely heartbreaking to see communities that had done the right thing in some cases. They had their insurance policies. Some places we were able to invest in wetlands. Some places we had been able to build dune systems. Those places that had those investments fared incredibly well. Those places that didn't were devastated. And though much of the talk today will be about the economic consequences of different rate structures, we need to figure out how to protect these communities. Because at the end of the day, the work that we do now is going to be the difference between whether these communities thrive in the future or whether they're absolutely wiped out, as we've seen in recent storms. So thank you for having this conversation. Thank you for focusing on vulnerable communities. Thank you for trying to have a more responsible program. And we believe we can work together with all of you to make sure we have reforms that really modernize this program for the 21st century.
Thank you, Mr. O'Mara. Mr. Lehman, you are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and members of the committee. My name is R.J. Lehman. I am Director of Finance, Insurance, and Trade Policy at the R Street Institute. R Street is a think tank whose mission is to identify pragmatic, market-oriented solutions to public policy challenges. I appreciate the opportunity to testify and share our views on reforms to the National Flood Insurance Program. Like National Wildlife Federation, R Street is a member of the Smarter Safer Coalition. This broad and ideologically diverse group has forged consensus on NFIP reforms that would make the program more fiscally sustainable, remove incentives to development in environmentally sensitive regions, to invest in mitigation and more accurate mapping, and to ensure the public has clear information about flood risks. The draft bill the committee will consider makes significant progress to address several of these priorities. I also hope to highlight a few areas where further reform would be appropriate. The most significant new element introduced in the discussion draft is the proposed demonstration project for means-tested discounted rates. We have long advocated for affordability provisions to help low-income policyholders. For too long, the NFIP's subsidies have been regressive, flowing disproportionately to wealthier counties. Ensuring that lower-income policyholders are not burdened with unreasonably high rates is crucial to the goal of phasing out subsidizing grandfathered policies. With the addition of an effective means-tested affordability program, this committee should move forward with a plan to place the pre-2014 grandfathered policies on a glide path toward actuarial rates, as these are the only policies currently scheduled to remain at below full risk rates. The draft would also forgive the entirety of the NFIP's $20.5 billion debt, coming in addition to the $16 billion of debt that Congress voted to forgive in 2017. It is not feasible that the NFIP will ever be able to repay its debt in full, but if Congress is going to once again forgive the program's debt, it must retain the borrowing authority cap, which forces Congress to revisit the NFIP structure should it once again prove unsustainable. The current cap of more than $30 billion is so large to provide no meaningful restriction on spending. The cap should be lowered, I would suggest, to about 1% of total insurance in force, which right now would be a cap of about $13.1 billion. The discussion draft also raises NFIP coverage limits. The current limit is more than adequate for most homeowners, and I'm not aware of any availability problems for policyholders in the excess flood insurance coverage, flood coverage market, which is typically purchased by businesses and high net worth homeowners, to the extent that there is a concern with residential multifamily policies. That could be something that could be addressed more targeted. The NFIP is and will likely remain the primary source of flood insurance coverage. The recent growth of the private market should be seen as a complement to the program, one that could help close the protection gap that currently leaves more than 85% of Americans without any coverage for floods. One step Congress could take to protect consumers as the private market continues to grow is to stipulate that those who move to private flood coverage can return to the NFIP at the previous rates. This protects consumers if, for example, a private insurer raises rates, changes its underwriting approach, or leaves the market. Finally, I wanted to offer for the committee's consideration a proposed reform intended to ease the process of adaptation to increase coastal flooding and tropical storms that we face as a result of sea level rise and climate change. In short, the NFIP should cease writing coverage for any new construction in 100-year floodplains. This approach would be modeled on the success of the Coastal Barrier Resources System, a 37-year-old program that protects 3.5 million acres of sensitive coastal ecosystems. The model of promoting conservation by removing federal subsidy has been adopted elsewhere successfully, including by public insurance programs run by the USDA and the state of Florida. As with the CBRS, barring new construction in 100-year floodplains from NFIP eligibility would not foreclose the possibility that developers could find private coverage. It also would not relieve the challenges we will likely face in the years ahead with the stock of existing structures already in those floodplains. It would, however, apply the ancient wisdom of the Hippocratic Oath: first, do no harm. Where we can cease encouraging development of flood-prone land without laying any new burden on any current resident, it is an opportunity we simply must take. And with that, I'd be happy to answer any questions.
Thank you very much, Mr. Lehman. I now recognize myself for 5 minutes for questions. Ms. Guzman, I have long advocated for long-term reauthorizations of the National Flood Insurance Program well in advance of expiration in order to ensure stability in the housing market. Unfortunately, we have now passed 10 short-term reauthorizations of the National Flood Insurance Program since fiscal year 2017 and have even seen lapses of the program in between these extensions. Can you talk about the impact that short-term reauthorizations and temporary lapses in the NFIP program have on the housing market?
Thank you for the question, Chairwoman Waters. Yes, the impact is 40,000 transactions were impacted in the last lapse. And it could be as many as 1,300 a day, but we know that it's 40,000 were impacted in the last lapse. What happens is people are not able to close on their transactions. And in many cases, when they're told to purchase insurance, they're purchasing it maybe 5 days prior to closing, maybe 3 days prior to closing, because it's not a very complicated process. With that, they find out, sorry, there is no flood insurance, and there's a requirement for you to have flood insurance to close. That upends the transaction. Now they have to scurry with their attorneys, also with the seller, and explain to them that they cannot close. And they extend, luckily they were able to get a week extension, some of them. Some of them were forced to close and we had to borrow money and make that transaction happen at that time. Lenders can do it and say, we will continue because we know this will be reauthorized, but they're risk adverse and they're not willing to take that risk and let the people close and move on into the transaction and move into their new home.
Thank you very much. Ms. Cox, Lamb, many people know that the National Flood Insurance Program provides flood insurance coverage, but not as many people understand that the role that the program plays in floodplain management, mapping, and mitigation. I have long advocated for robust funding for these activities because I know how important they are in strengthening our resiliency in the face of future storms. Can you talk about this important part of the National Flood Insurance Program and why it is so critical that these activities are adequately funded?
Yes, ma'am. Great question, and thank you. When it comes to floodplain management, floodplain mapping, and mitigation, all three of those tie in together quite nicely. You can't really run one without the other, and so especially at the state and local level, these are very important. I happen to run the Cooperating Technical Partners program for South Carolina, so the mapping programs run through the state. You have to identify mapping, flood areas. Floodplains change over time. The maps have to be updated. In order to do sound floodplain management, you have to have great mapping. You also, in order to know the best places to mitigate, you got to know where the floods are going to occur. We do have an issue where a lot of people do not realize that what we map is a regulated floodplain. That's not everywhere that can possibly flood. So it's really important that we have sound floodplain management. Individuals understand the mapping and what it actually entails, and also when it comes to mitigation, making sure we can properly identify who needs to be mitigated. Thank you.
Thank you very much, and I'm going to now call on the ranking member, Mr. McHenry, for 5 minutes for questions. I yield.
Well, I thank the chair. So I want to talk about data, right? Because we have within counties, we have within parts of our government precise data. We have climate data that's collected. So, Mr. O'Mara, we already have this massive amount of data used with taxpayer dollars collected, right? So what kind of data would be helpful to make public for us to have really good governance, but also have a better understanding of the risks that we're facing? And from your footprint as a former regulator, if you could speak to that.
Yeah, look, this is one of those areas where I think just full transparency is important. And I think having as much property level data as possible, not just the generalizations across a watershed or a sub-watershed or, at a higher topographic level. I mean, you want data, a couple meters. I mean, you want data really down, and you want equal amounts of financial information. And frankly, your state of North Carolina does this better than anybody. You go on the website, you look up your parcel, you see where you are in the floodplain, you see what the risks are, you see what the options are for financial coverage, you see what the options are for
So our county GIS systems actually incorporate the floodplain into that county level, property level data.
Exactly.
So at the county level, we actually have where that physical premises is that will be the cost driver of a flood. Is that not readily available in other jurisdictions?
It's completely uneven across the country. And most of it's coming from local jurisdictions more than from the federal level.
So tell me what that should be then. As a policymaker, what should I be driving for?
You should be driving for property level data that's publicly accessible, that lays out a combination of the kind of geotechnical information about elevation and kind of risk for the floodplain, but then also financial information, and link it all together so there's a one-stop shop. You can go to one location and get all the information you need to make a wise decision for your family.
Ms. Guzman, as a practicing realtor, is that data helpful to you and your customers?
Most absolutely. I have to say that right now there is a lack of due diligence for the buyer. When they want to make a purchase, they really don't have complete information. Even though there are state disclosures, those disclosures are just basically check the box. Is it in a floodplain? Yes. Has it flooded? Yes or no. But it doesn't say how many times it flooded. If they mitigated, what was the cost of the flood, which based on your graph, it says 1 inch of water would cost $25,000 in a 25,000 square foot home.
But you're held accountable for these disclosures as well.
Absolutely, and we make them. The thing is, you check the box. Yes, it is in a floodplain. Yes, the home flooded. It doesn't account for how many times. They don't have to disclose that. They don't have to disclose the cost of if they mitigated or not. The thing is that the buyer then lacks, the buyer lacks due diligence because if the maps...
This is helpful. So, Ms. Smith, do you want to comment on this on behalf of Pew?
Sure, and we were happy to reach accommodation with the National Association of Realtors because we also believe there has to be transparency and people have to have the information they need to make good financial decisions, to know whether a property has flooded, whether it's a repeat loss property, how often it is flooded, to know that information before, and even for not just home buyers, but for renters.
So what you're saying is that is currently not available in one place?
Yeah, and can I follow up? The information should be available.
If you'd vocalize that for the record, Ms. Smith.
I would say it is
no.
not, the answer is no, and it's in many cases it's not available in any place.
Okay, but this is data that should be available and is in our technological capacity is far greater than it was 50 years ago, or even 10 years ago, for that matter, because where we are with GIS systems. So I want to talk about risk transfer just for a moment. Mr. Lehman, we've seen reinsurance having a positive effect on the national flood insurance over the last handful of years. Yeah. How effective has that been, and how can we make it more effective?
So certainly for the first year, the return was immediate because in 2017 we had such significant floods from Hurricane Harvey primarily that you maxed out the coverage. So that was a major return to taxpayers on what they spent on premium.
So reinsurance has actually been beneficial to the taxpayer since we've done that. Is that correct?
Yeah, that's correct.
Same way, Mr. O'Mara? Okay. Likewise, given the severity of storms, given the nature of our climate right now, Mr. O'Mara, this type of climate data should also be a part of this conversation, should it not?
Absolutely. We want to show the true risk rate, right? So you want to show every potential risk. And look, I mean, we should be including in the modeling things like sea level rise and subsidence and other things so people can make informed decisions about the risks they're facing.
All right. Thank you. And thank you, Chairwoman Waters.
Thank you very much. The gentlewoman from New York, Mrs. Maloney, Chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you for your discussion draft. And I would like to publicly thank you for including language that I presented in the last Congress to take into concern the the special mitigation credit needs of New York City from lessons that we learned in Hurricane Sandy. I would like to ask Ms. Guzman, as you are well aware, New York faces very unique issues when it comes to flood insurance, in particular the mitigation techniques that the rest of the country uses, such as elevating properties on stilts or elevating them in some way. It doesn't work in New York. Most of our people live vertically, not horizontally, and it's hard to put on stilts a 50-story building. So this makes it very hard for families in New York to get their flood insurance premiums lowered because they currently don't get mitigation credit for the types of mitigation that we use in New York, such as moving a boiler from the basement to the top floor or moving electrical equipment. So my question to you is, do you think it's a good idea to allow mitigation credit for different kinds of mitigation that are used, for example, in dense cities like New York, which the chairwoman's discussion draft includes, and can you expand on this?
Yes, absolutely. We believe in a mitigation-centered approach, and that would include flood vents also in basements, as well as moving the utilities. Currently, right now, that is not included in the current program as it exists. Mm-hmm. So giving people more options, and there are also other ways of mitigating that could reduce costs and risk. Again, for every dollar spent, save $6, and that's from the National Science Building Institute. So that's why modernization is key here. And I do want to go back to a previous question with regards to disclosure, which is check the box. The thing is that we need flood facts. I was talking to a friend of mine, Rita, over lunch, and telling her that I would be here testifying with regards to flood insurance, and told her that, in many cases, people don't know whether that home are flooded or not because there's no information. And she said, that's so weird. I just bought a car, spent $30,000, and I found out whether that car flooded or not. Mm-hmm. So you're telling me I'm going to make a purchase of $200,000 or $500,000, but there's no way for me to find out if that property flooded or not. So just like a Carfax, we really need a flood fax where the buyer can do all the due diligence necessary to make a sound decision, because this is going to be most likely the largest investment they're going to make. Thank you.
Thank you, Ms. Guzman. And can you talk a little bit about the state revolving loan funds that are included in the chairlady's discussion draft? How do you think these loans will affect low-income households? And is the possibility of forgiveness of the principal on the loan enough relief to make sure that these loans don't unnecessarily burden low-income families?
If this is a discussion with regards to low-interest mitigation loans, I believe that they are a good idea. For simply right now, people are coming out of pocket to make repairs and adjustments to their property. And in many cases, because the maps, which I'll probably say 1,000 times today, the maps do not reflect accurately where these properties lay. Additionally, they don't account for a lot of heavy rainfall, which I live in a metro market, and that's exactly what happened. So these loans would give them low-interest loans that give them an opportunity to do mitigation, and mitigation that matters, that reduce the cost to the taxpayer, as well as reduces the risk to the homeowner as well.
Thank you. And Ms. Lamb, as you know, over 20,000 communities across the country participate in the NFIB, and over 5 million policyholders rely on it for flood insurance coverage. Can you explain what would happen when those communities and families no longer have access to federal flood insurance during a lapse? How would it affect them if there was such a lapse?
Thank you. The citizens and families, when there is a lapse in the ability to have federal flood insurance, there's a couple of things that actually happen. One very specific is if it's tied to their mortgage and there's a lapse and they're unavailable to renew or purchase flood insurance, their note's called in. So most people cannot afford to pay off their mortgage in 30 days, and that's currently the way it's done. The other thing is they can't protect themselves, and that's the one thing that's most important, is that when someone does understand their true level of flood risk, that they're able to protect themselves. And flood insurance is the one way, as we've all spoken about, that someone can actually be able to make themselves whole much faster than any disaster assistance we could ever provide.
Thank you.
Mrs. Wagner, the vice ranking member, the gentlewoman from Missouri is recognized for 5 minutes.
I thank the chairwoman for yielding, and I thank all of our witnesses for appearing today to discuss the reauthorization of the National Flood Insurance Program, which, as we all know, and has been said multiple times, is set to expire yet again in May. You know, I spoke on the House floor in November expressing my profound dismay with the eighth short-term extension vote since fiscal year 17, with the NFIP being $20.5 billion in debt. We must reform the program to keep it solvent, to provide coverage for those who truly need it, and to protect the taxpayers from additional and future bailouts. It is estimated that only 3.5 to 4.5% of current flood insurance policies are covered by the private sector. Mr. O'Mara, do you believe that there should be greater private market participation in those policies that cover threats from floods?
Absolutely, and we see the opportunity of the federal program focus more on vulnerable communities and the private market take care of more folks that can afford it.
The flood insurance market is dominated by NFIP, Mr. O'Mara. Do consumers benefit from this near monopoly?
I think more data and more competition is good, and I think the concerns that have been raised in the past have been discounted by the real-life experiences of states like Florida that have shown that you can actually have competitive marketplaces.
And how does it work in Florida? How is it working in Arkansas and places like this, in the private market?
So the places that it's working best are places where the policies are at a good level. I mean, there's kind of good standards around them, and they're making sure that banks and others are kind of accepting those as fully viable alternatives to the federal program.
Mr. Lehman, when the NFIP was created in 1968, I think I was 6, the belief was that the private insurance market lacked the data and ability to assess flood losses. We've had a little conversation about data here, which has been very important, especially that relating to mapping. Tell me, what has changed in terms of data, technology, and the market's ability to assess risk since 1968?
There's a few things that have changed, among other things. The insurance industry used to be much more local. It is a global industry now. Reinsurers in particular operate internationally, take large risks from different parts of the world, balance them against each other, and that's how they're able to cover very large events. The depth of the global reinsurance market, the ability of catastrophe modeling, the emergence of the catastrophe modeling industry, and just general changes in how insurance is underwritten has made it possible for a private market to emerge. It is not prepared to take over for the NFIP. The NFIP remains the primary source. But it is emerging, and it will continue to grow. What we need is both. We have 85% of the country without any flood insurance, and there is a significant need for the marketing juggernaut of the insurance industry to start having an incentive to sell this coverage to people who don't currently have it.
And in that same keeping, which barriers within NFIP prevent private insurers from entering the market? And how do some of these legislative drafts today help solve some of those problems?
It seems like a good number of the issues with the banking requirements may be resolved by the rule that is currently open from the FDIC and the other banking regulators. I understand that the FHA remains an open question, and I know some of the other panelists have discussed that. The biggest disincentive right now to the program is if you are going to move from the flood insurance program to a private policy and then want to move back into the flood insurance program later, you're not currently considered to have continuous coverage. And so if you had a subsidized or grandfathered policy, you would be stuck with the full risk rate. I want policies to generally move towards full risk rates, but that can be punitive in the short term.
In the short term. In the long term, though, we could see real movement, I think, into the private sector. And some of the tools that we talked about, like reinsurance and additional data dealing with mapping and other things, these fact checkers ought to be able to allow underwriters to move this into the private sector more. Would you agree?
I agree.
Mr. Mara?
Yes.
Ms. Guzman?
Absolutely. And may I add that on that lapse of 40,000 people that were purchasing, a lot of those were FHA loans, and they were not given an option to go and seek private mortgage insurance so that they could close that transaction.
I appreciate it. Thank you. I thank the chair.
Thank you. The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes.
Thank you very much, Chair Lady. Ms. Waters' bill here is so timely, so necessary, and I certainly want to commend her for providing leadership and making sure we get a 5-year plan, because we need to bring some stability, responsibility to this for our people. Because, ladies and gentlemen, all of the scientists, all of the scientific evidence that we can get from the experts, we are moving into a climate pattern now that's going to be more flooding, more rain. Whatever is causing this, the scientists are there. We've had back-to-back hurricanes. Now, this is important for me because Georgia and the area I represent is right in the valley of this. Many of you may remember we had a big flood down, and we were able to get the vice president to get a plane, Joe Biden, and we flew down. And the press took these great pictures that showed 6 flags over Georgia down, flooded, to the point that we had to refer to it as 6 flags underwater in Georgia. So, and in that area, we had to bring over $35 million for hazard flood mitigation to Cobb County, Douglas County, and Fulton County in Georgia, where all of that happened. I bring that up because it may be possible that we need to do some bold things here. And first I want to talk about, because to follow up in the line of discussion on the private, private flood insurance industry expansion. Mr. Hendrick, is that Heydrich or Hendrick?
Heydrich.
Heydrich.
Thank you.
Wonderful. As you know, there's been testimony and discussion today on how the NFIP is not just an insurance program, but also has other important functions related to floodplain management. Do you think that if the private flood insurance industry expands, that it will increase risk because the NFIP will not be able to support those other functions? Would you expound on that for us, please?
Sure. Thank you for the question. No, I don't believe that that would be a long-term problem. Private insurance companies need data in order to select and underwrite and properly price risks, just like the NFIP. And to some extent, those private companies use the government-created data, but to a large extent they don't. They rely on private vendors. The NFIP is also in the process of going through its Risk Rating 2.0 revision, which is going to change the way that they establish rates and the data that they use. So if the question is, would a private company pay to access the data that the government provides, I would say, I don't know this firsthand because I'm not an insurance company, but intuitively I would say if it adds value and it's effective and provided efficiently, then intuitively I would say yes.
So how would you describe the current relationship between your private insurance and the flood insurance program, which is federal?
There are multiple choices, and that's what customers really appreciate. There have been, in my own agency, there have been hundreds of customers that I have rewritten from the NFIP to private insurance companies at lower premiums and better coverage.
Now, let me ask you this, because we worked hard, Ms. Waters, myself, and I must say Mr. Duffy, were able to work and get an amendment passed for monthly installments, that people could pay their flood insurance in monthly installments. And that was a big contribution that we made, because before that, they had to pay one lump sum, and so people went without it. How would that relate with private insurers?
May I answer, Madam Chair?
Please go ahead.
Thank you.
Thank you.
The challenge that we have with monthly installments is to a large extent solved by escrowing within your mortgage payments. If you don't have a mortgage, that's where the installments come into play. And it is valuable because it helps take up rate, which is something that we're all trying to accomplish. But the challenge that we face is that flood risk is often seasonal. Snow melt happens at a certain time of year, hurricanes happen at a certain time of year. We need to make sure that people can't buy a policy, pay a couple of installments for the dangerous part of the year, and then drop it.
Thank you. Thank you, Chairman.
Thank you. The gentleman from Florida, Mr. Posey, is recognized for 5 minutes.
Thank you, Madam Chair. I've hesitated to weigh in on this issue too deeply over the years for a number of reasons. It's one of those cases where it seems like everybody in the room knows how to make a baby stop crying but the person holding it. You know, this flood insurance issue is not rocket science. It's, you know, not really difficult proposition to understand. The national participation rate, as we heard earlier, is 31%. You have 31% of the people paying for 100% of the losses. Do the math. If it's good actuarial, you're going to be taking it in shorts every single year. And that's what we've been doing with NFIP. In Florida, the participation rate is 46.2%. And just compare, just for example, in my county where I live, the average premium for private flood insurance is $209. NFIP is $501. The median is $100 a year. The poorest of poor that own a home can afford that. For instance, it's $388. And there's a number of ways they make that affordable, and I'd like, Madam Chairman, if we could have a hearing on that sometime or a discussion. I'd like to bring some experts up here and explain how they do it in Florida. Not that you should do everything like Florida does, but you know, there's a number of reasons that people don't participate in the system. You know, they don't know they're not covered by their homeowner's insurance policy. They don't think that they have a risk. They don't understand the necessity of it. There's a lot of good reasons for that. Mr. Heydrich, your agency is located on a barrier island, and yes, so you know the importance of your customers understanding what the risk is. Yes, in your experience, how has increasing the availability of private flood options affected?
I would say most significantly, and what really stands out in my mind is immediately after Hurricane Irma. If you recall, the weather predictions or the storm surge predictions for Southwest Florida were dire 15-foot storm surge as far as 10 miles inland. I had a number of calls, many calls in the 2 months following Hurricane Irma from clients who told me that they remember the conversation that we had about flood insurance, and primarily excess flood insurance. Most of these customers did have a primary flood insurance policy, and many of them through the NFIP. But they realized how much exposure they had and how real that felt, and came to the conclusion that they may have overestimated their tolerance for risk at the time that we were initially discussing the coverage, and then went on to buy either an excess policy or a private policy that would offer them the ability to fully insure the value of their home in a single coverage.
You know, the standard joke around here, NFIP reform every time, means we cut the sales commission for the people that broker the stuff, who have to service it when times get bad. How do you think that affects the market?
A reduction to compensation in any application is going to reduce availability. So a reduction in agent commissions is probably going to drive some number of agents out of the program. The NFIP is incredibly complex. Okay. It's way more complex.
That's Ms. Lamb, you talk about the problems getting good maps. Have you ever asked to use the Department of Defense maps? They've got every inch of this country mapped. They know every crook and nanny, every swale, everything. National Geodetic Service probably the same. Homeland Security probably the same.
We have pulled some information from multiple resources. Those maps have been made available to us. We've made some requests. But the complexity of a flood insurance rate map and the modeling is a little different than what some of the others do.
Most of the people selling private flood insurance or brokering private flood insurance or insuring private flood insurance in Florida don't use those bogus maps anyway. The NFIP arbitrarily puts people in, puts them out. They all have the same rate. There's no weighted for risk. I mean, it's ridiculous. That's not how we're going to solve the problem. But the only risk to NFIP that going more to the private market would give is it would stop NFIP from going further in the hole and being a burden on the taxpayers. The coverage would really be more affordable for more people if we would do that. And I want to share with you, while insurance companies are used for standard homeowners insurance policies and storms to use a 100 or 150-year term in their forecast, they have to use a 400-year catastrophe for flood insurance when they go to their reserves. So it's, it's not, a bait and switch. And Mr. O'Mara, you indicate we should have all our rates based on the future effects of climate change and ocean rising and stuff. That's kind of like making me be rated as a driver 20 years ago from now when I'm 90. I mean, that's ridiculous. Thank you, Madam Chair. I yield back.
Thank you. The gentleman from California, Mr. Sherman, is recognized for 5 minutes.
The chair and I both represent a city which is the greatest city in the world, built in a desert, experiencing a drought. But even we realize the importance of flood insurance to this country.
Have fun.
I see when it rains, it pours, and my region of the country has gotten 5% more rain. Unfortunately, Los Angeles, to my knowledge, has not gotten the. So if we can bring some of that rain from the Northeast, that would be helpful. There is in automobile manufacturing a concept known as just-in-time parts delivery or inventory delivery, where they bring the parts to the factory just hours before they'll be put on a car. Unfortunately, Congress is copying that with just-in-time legislating. That if we can extend the flood insurance program just minutes before it's going to expire, that somehow we have reduced inventory. Ms. Guzman, are there examples where people can't sell their homes, worry about whether their escrow is going to close because Congress has waited to the last minute or a minute before the last minute or a minute after the last minute to reauthorize this program?
Yes, sir. There's 40,000 examples of that happening, and all at the same time. And without many of those folks having a recourse to even get the option of seeking private flood insurance, they end up not closing. So that was the impact of the lapse. So it's irresponsible because consumers, our citizens are counting on you to actually reauthorize. And they're also actually asking for you to reform
So we could be helping home buyers, homeowners, people who want peace of mind, people who'd like to think that, gee whiz, if our kid doesn't get into that magnet school, we might want to move, we'll be able to sell. We can make all those people better off without spending an additional nickel if we just do our job sooner and not wait to the last minute. Mr. Hedrick, do you support a 10-year authorization of the NFIP?
Absolutely.
Back to Ms. Guzman, your testimony suggests that providing more resources for property owners to mitigate flood risk makes sense. What aspects of the discretion draft do you think efficiently do that?
Well, it's the low-interest loans for mitigation. Currently, right now, if someone has to do, I had a client who actually had to mitigate their property, and they spent close to $12,000 to retrofit to make it happen. That was out of pocket. By the way, they were selling their home in 3 months, so it wasn't like We're going to live with this pain. We're going to take care of it. And we want to give confidence to that next purchaser that buys our home that we did everything possible, not only to disclose, but to mitigate so that they're not buying a problem. Low-interest loans give them the opportunity not to go $12,000 out of pocket, but at least finance part of it and then be able to, payment over time, resolve this issue. But $12,000, I think, for any family up front is a lot of money.
Mr. Hedrick, what's the #1 complaint or concern you hear from flood insurance consumers?
Most of the complaints come from uncertainty and complexity. The uncertainty with the various short-term reauthorizations, as you've described, it can keep a customer from knowing whether or not they're going to be able to renew their policy on time, if they're going to be able to purchase a policy, they're about to purchase a home, and will the NFIP be reauthorized or not by the magic hour that you discussed. And then the complexity of the program creates an awful lot of confusion, and both of those things damage consumer confidence in the program. So overall, I just hear general dissatisfaction for those reasons.
I don't want to hit too partisan an issue, but climate change is real. We're going to have it rain in different places. We're going to have rivers overflow their banks. We're going to have a system to mitigate loss before it occurs. We're going to have a system to insure against loss that does occur. And I commend the chair for the discussion draft, and I yield back.
Thank you very much. The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes.
Thank you, Madam Chair. I want to talk about two things here today. One is reinsurance and one is private insurance policies, because to me, these are the two things that if we do nothing else with changing the flood insurance program, this will protect my constituents and the taxpayers. And number two, you shift the risk also to the private sector with new policies. And I think when we hold this hearing 5 years from now, we have a completely different set of issues we'll be talking about, and we'll be tickled pink about how this has all turned out. If we just do those two things. So my first question is to Mr. Lehman. In your testimony, you mentioned that reinsurance is a fiscally responsible alternative to taxpayer borrowing. In recent years, FEMA has purchased over $1 billion a year in reinsurance. Do you think the FEMA portfolio should look to expand the reinsurance portfolio?
Right now, yes. I mean, the reinsurance market has been in what's called a soft market for quite a while, which means reinsurance is pretty cheap. So you can do pretty well in leveraging reinsurance. At any given point in time, that can change. Reinsurance rates can go up, and it might not be as cost advantage, but right now it's a great opportunity.
You know, it's interesting because I chaired the Housing and Insurance Committee 2 sessions ago and spent a lot of time on this issue. And I did a lot of research. I took 20 years worth of income and expenses from NFIP, and I could prove, and I'm a banker, so I actually can add and subtract, use an adding machine, a calculator. And so I quickly found out that if NFIP had been using reinsurance and purchasing over the last 20 years, then number one, they could afford it, and number two, we wouldn't have had to borrow a penny until these last 2 hurricanes last year. Yeah. It's very frustrating to me to see the incompetence that's been there with regards to NFIP directors in the past, not utilizing a tool that every other insurance company in this country uses. Can anybody name an insurance company that does not use reinsurance? I don't think there is any, other than, guess what, NFIP. So why is this not done? I have no idea, other than total incompetence, because number one, they can't afford it, and number two, my constituents, my citizens, will no longer have to be on the hook for these borrowings that continue year after year when we have a disaster. So thank you for that, Mr. Lehman. Mr. Hedrick, you're talking today with regards to the insurance agent's perspective. One of the things that we've talked about a little bit about today is the ability for an insured to be able to go back to their NFIP policy. Can you tell me how important that is?
It's critical because currently there are consumers who are trapped in the NFIP. I can give you an example. A customer who's had mandatory 25% rate increases over the last 5 years, compounded, their policy premium is now triple what it was in 2014. There are private market solutions for these people that would offer them an option at lower premium and better coverage. But it's irresponsible for me, in my opinion, to offer that alternative because I can't quantify the risk that they are taking by leaving the NFIP and not being able to return under the same terms that they're leaving.
So Ms. Castor and I, who is a Democrat, I'm a Republican, have offered a bill to do that very thing. Allow an individual who goes to a private sector insured insurance company to be able to come back to NFIP. I believe it's vitally important to be able to do that. And I think, you know, Mr. Hill from Arkansas sits directly in front of me here. He has 2 companies in his state that write private flood insurance. Both of them will take every single risk. You know, the problem a lot of folks see is cherry picking. They don't cherry pick because they're smart enough to understand how to underwrite every single risk. And every single risk is insured, and they do it anywhere from 20 to 80%. I said 20 to 80% of what NFIP charges. So why would we not allow our citizens, my constituents, your insureds, to be able to go to the private sector to find better coverage at a cheaper rate? To me, this is vitally important. And the key part of this, as you just said, apparently is allowing them then to be able to go back in case these companies raise rates beyond what NFIP is. For some reason, they get canceled, they pull out completely. So I appreciate your perspectives. Thank you. Ms. Guzman, in your testimony, you're talking about private insurance as well. Would you like to give us an example, perhaps, of somebody that you've talked to, or somebody about a home who was able to get a private policy and was able to save some money and protect themselves?
Well, the client who did the mitigation for $12,000, they didn't have flood insurance, and I'll tell you why. Because they were not considered to be in a floodplain area. And again, inaccurate mapping. Also, they were out of pocket $12,000. Now, the buyer who bought it was very happy that they did the mitigation, but still, again, when they signed the disclosure, did your home flood? Yes, they checked yes. Is your home in a floodplain? No.
Thank you very much. I yield back.
Thank you. The gentleman from New York, Mr. Meeks, the chair of the Subcommittee on Consumer Protection and Financial Institutions, is recognized for 5 minutes.
Thank you, and thank you very much, Chairwoman Waters, for hosting this hearing and for your leadership on this issue. As most people know, certainly in the flood insurance certainty in the flood insurance market is critical, especially for a district like mine, which is a coastal district including the entire Rockaway Peninsula, Broad Channel, and Inwood. For far too long, Congress has kicked the can down the road, paying down on NFIP's debt, providing long-term reauthorization, and ensuring the program's sustainability. We can't continue to kick it down the road. But I think that we should be able to get something done this Congress, considering the leadership of Chairwoman Waters and the relationship and working with Ranking Member McHenry. We should be able to do something in a bipartisan way, and I think that their working together helps us get down the road. For me, central to any reform effort is investments in mitigation. We saw firsthand how mitigation investments can produce resilient communities that can withstand what are increasingly severe storms. Take the community of Auburn by the Sea on the Rockaway Peninsula in my district as an example. When Superstorm Sandy devastated most of the Rockaway Peninsula, Auburn emerged with minimal water and wind damage, no fire damage, largely because of resiliency measures. To be honest, I believe that we need more Auburns in Queens and more Auburns in other coastal communities nationwide. And that can only be yielded through greater investments in mitigation, coupled with robust policies to address our climate change crises, because climate change is real. With all that being said, I do want to understand proposals to remove en masse properties from special flood hazard areas. I believe one of the discussion drafts has such language in it. Thus, it caught my eye since the Rockaway Peninsula is entirely in a special flood hazard area. So I'll start with Mr. O'Mara. You identified potential concerns in with this idea. Could you elaborate on potential problems here?
No, thank you, Mr. Meeks. And we really like working with you after Hurricane Sandy to restore some of the areas around Jamaica Bay in particular, right, that had huge resilience benefits. And I think you're exactly right. The natural defenses are incredibly important. Our concern about that provision, it's very unclear in the draft, and we want to work with the staff in trying to figure out what exactly was intended. We need to have property-level data. And so if you start in mass taking out units that are in harm's way, you're sending a signal that they don't have to worry about potential flood abatement. And if anything, we should be looking more at a greater level of stringency so folks know very clearly if they're in harm's way from whether that's a hurricane or inland flooding. And we're just very concerned that the way that's written right now, you could have folks taken out of the program and being told they're safe when you and I both know they're not.
Ms. Guzman, do you have anything on that?
No, sir.
Okay. Let me move on. You know, again, I get flooded in my office in Rockaway. A number of my constituents recently came in to discuss issues with elevation certificates, raising their homes, their elevation certificates. They've secured their elevation certificates, yet they've seen no adjustment in their premium despite submitting those certificates to the carriers. Now, this is admittedly largely anecdotal evidence, but the National Association of Professional Insurance Agents, and I don't think anybody is here on this panel, submitted a testimony for the record noting that the elevation certificate process is both bureaucratic and lengthy. And has anyone else on this panel experienced issues with the current elevation certificate process and have ideas on how we can improve the system? Maybe I go to Mr. Hendrick.
Thank you for the question. Yes, I have experienced issues with elevation certificates. For one, the cost of an elevation certificate is somewhere that can range from $200 to $1,500, depending on where you are in the country. And with the National Flood Insurance Program, that certificate is required in order to obtain a quote. So that expense to the applicant is incurred before they even know what the premium is going to be for that policy. We do see error rates on elevation certificates. They're done by hand. They're done the location by location, and not always are they done by a surveyor that has a lot of experience with them. So there are times that you get something that creates an error. And when those errors occur, it's not something that's always transparent to the agent. So now the agent submits that document to the Write Your Own insurance company and may come back with a premium that is significantly higher than what was originally anticipated.
Thank you. I'm out of time.
Thank you. The gentleman from Georgia, Mr. Loudermilk, is recognized for 5 minutes.
Thank you, Madam Chairman. Thank you for the panel for being here. It's a mess. It seems to be status quo for a lot of things we do here. It's long been known that NFIP is unsustainable fiscally. I mean, I've been reading over the draft of the legislation, and we're going to forgive $20 billion in debt, and that's after Congress has already forgiven $16 billion in debt. One thing that I hear from people back home, frustration with the federal government, is the government doesn't live by the same rules that we put on the people. I mean, how many businesses or how many individuals would we just go and forgive their debt? Occasionally, creditors will do that, but then the IRS is going to send you a bill for how much the tax portion of the debt you were forgiven. So I think we need to be a little more fiscally responsible as we move forward. And I'm a little, well, I'm quite perplexed that we're not going to address any major reforms regarding the fiscal problems that we have with flood insurance on this. And unless you make reforms, you'll never change behavior. In a few years, we'll be back in this position again. But with that, I do appreciate the focus we have on mitigation. There seems to be interest in making the program more fiscally, that portion at least reformed in that area. But it is unfortunate we're not doing anything to make it more fiscally stable and sustainable. One of the ways I think we can make it more sustainable is to bring more capital investment into the NFIP program. And it's something that has been unanimously supported on this committee in the past. And pleased that banking agencies have recently decided to move ahead with clarifying that private sector flood insurance policies can be used to meet mandatory purchase requirements. So, Mr. Hendrick, I know the growth of the private flood insurance market, it's not going to happen overnight. It's going to take a while. But are there insurers interested in underwriting more flood policies?
Thank you, Congressman. The answer is yes. And as unnecessary barriers are removed, for example, the continuous coverage discussion that we had earlier, more and more private insurers will come into the market responsibly as long as they have access to the data, know they can underwrite, and know they can create a set of rates that are predictable and accurately reflect the risk.
So in the previous panel, Mr. Duffy laid out a scenario of private insurers coming in and taking a multitude of risk, but wouldn't be necessarily going for the subsidized market. Do you agree with his analysis on how private insurers would come into the market?
I think the best way to characterize how private insurers will work is look at any other aspect of the industry. If you watch television, you see several articles from auto insurance companies over the course of your hour or whatever it is, all claiming to save their customers on average $400, $500, $600 a year. The reason why that happens is that every private insurance company is going to have its own methods for selecting and pricing risk, including the NFIP. And they can all coexist and make a profit having their own proprietary methods of selecting and pricing risk.
Okay, thank you. One of the things that we've addressed before is just how complex the NFIP program is. And I think we can agree across the board that it needs to be simplified. In fact, when we had the reform package in the last Congress, I submitted an amendment that was unanimously supported by the committee that would require GAO to study the NFIP program and how it could be simplified in statute, regulation, and administration for policyholders and private sector providers. Mr. Hendrick, again, do you agree that it's quite complicated and difficult for policyholders to understand?
It's complicated for agents to understand as well. I mean, it is a 400-page manual. It is it is complicated and complex. Consumers don't understand it, and that simplification should lead to increasing take-up rates, just like adding private insurance companies. And the more options that we give to consumers that make sense, the more people you would think would buy flood insurance, and the more Americans we would have, or more households we would have insured for this peril.
Okay, thank you. I have several other questions. I can submit them for the record since I see I'm running out of time, and Madam Chair, I'll yield back.
Thank you very much. The gentleman from Missouri, Mr. Clay, Chair of the Committee on Housing, Community Development, and Insurance, is recognized for 5 minutes.
Thank you, Madam Chairwoman, and thank Mr. McHenry for calling this hearing. Let me start with Ms. Smith. Ms. Smith, in your testimony, you indicate that the problem of rate setting has been challenging for a number of reasons. Some view the flood insurance program backed by the government as a subsidy and actually provides an incentive for many to build or rebuild or develop in areas that have shown a propensity for flooding and other storm-related damage. Time has shown that while some of the assumptions about flood management and prevention are true, it is not an exact science. Can you touch on some of the PEW's recommendations in the area of the rate structure of the NFIP?
Yes, thank you for the question. We understand that on the one hand, if people see rates as too high, they won't buy flood insurance, and that's a problem. On the other hand, if we do affordability and lower rates, we potentially run into more need to borrow. So what we're saying is that we would anticipate the solution is a very targeted to the very most needy folks who need that insurance and need some help with that insurance. At the same time that we try to address some of those persistent problems that the program has. We would like to see, we're very pleased to see a big investment in mitigation. As Mr. Scott said, this is an area we need to do something bold, and we need to really help some of those communities that have the greatest risk. we also need to learn from the mistakes we've made in the past. We've created a lot of risk, we've put people in harm's way, and we need to do a better job looking at the future about where we should be building, where we should be investing, where a community wants to extend sewer and do development. It needs to be away from where they're going to be at flood risk.
How about the area of rebuilding? Should we allow that, or should we have some strict controls over that?
I think we have to look hard ahead of time and have consideration that if you're going to rebuild in certain areas, you're either going to have to be rebuild higher, you're going to have to rebuild stronger, and in some places it's only sensible to move out of the area. Yeah. So it's a little of all of the above.
Thank you for those responses. Mr. Hendrick, do you find that the high costs are always risk-related, or do you find that low-risk policyholders are cost-burdened by the numerous fees, surcharges, and assessments that are paid on top of the premiums?
The non-risk portions, the taxes, the fees, the surcharges affect all policyholders. And as a percentage basis, some of the least expensive policies would have the highest percentage of non-risk premium portion. So, for example, if you have a $500 premium and has a $225 surcharge or a $250 surcharge, on a percentage basis, that seems extreme, and it does cause people to drop their coverage.
So what should we do about those that should have flood insurance but cannot afford it?
Affordability is incredibly important to making sure that as many people as possible are protected against this peril. What I would urge is that any affordability solution that we come up with should be outside of the rate structure of the NFIP, because the best indicator of what one's risk is the premium that they're charged to transfer that risk.
Thank you for that. And Mr. O'Mara, currently the federal government regularly pays out billions of dollars for disaster relief in the aftermath of major flooding events, and research shows that we can significantly reduce the amount of costs incurred by damage as a result of flooding by investing in mitigation. Can you talk about what we can do about mitigation?
No, absolutely, and I think, thank you, Mr. Clay. The best investments we can make are in the hot spots where we've seen repeated flooding, repeated losses. And so as the other committees are talking about infrastructure, having this committee weigh in and say we want to make sure that resilience is a part of it, I'm very partial to the natural solutions, rebuilding the wetlands, the dunes, the riparian corridors that can absorb a ton of water so they don't flood out people. That's a great solution.
Thank you, and I yield back. Thank you. The gentleman from Colorado, Mr. Tipton, is recognized for 5 minutes.
Thank you, Madam Chair, and appreciate the panel taking the time to be able to be here today. I'm out of Colorado, and my home happens to be at 6,200 feet. Nearest river is probably about 10 miles away, and you guys might call it a creek. But believe it or not, in Colorado, we do have flood issues to be able to deal with. One of the greatest challenges that we've really had has been wildfires that have been going through. Durango, Colorado, 45 miles away from my home. Basalt, just outside of Aspen. We have these burn scars that literally burn everything literally to the ground, and we do have flooding. Right now, good news, we've got abundant snowfall, snowing right now in Colorado, but that snow will melt. And if it comes out of the hills quick and fast, we're going to see some real impacts. And I'd like really to have something that there's been a fair amount of conversation today on. I've taken a real interest in terms of some of the mapping. That's what we're hearing back locally. And maybe we can just start with you, Ms. Lamb, and how quickly does or does not FEMA's flood map respond to rapidly changing terrain?
It doesn't.
Okay. Mr. Hendrick?
I don't have experience with mapping.
Okay. Ms. Smith?
Mapping is a slow process, and communities need to be able to stay on top of changing risk.
So it's slow. Ms. Guzman?
It's horrible. It's not up to date, and it's
Mr. O'Mara?
When it's horrible and it doesn't use the latest technology like LiDAR that would actually have pinpoint precision so folks would know exactly what the risks are in real time.
Okay. Mr. Lehman?
Yeah, indeed. LiDAR would also help with having actual property level mapping as opposed to these really not at all bespoke maps that we use now.
So I'm gathering from Mr. O'Mara and Mr. Lehman's comments, and the rest of you can maybe chime in on this. Are we using the best technology available right now in the mapping?
No, may I respond?
Yes,
no,
ma'am.
absolutely not. I mean, when you're looking at, it's really interesting on FEMA's fact sheet for building on higher flood zones, it states one way flood risk is communicated is through maps. Yet their maps are completely inaccurate. It doesn't reflect elevations, especially in areas that are considered flood zone. The home may be already in higher elevation, so it is considered low risk. But that homeowner is paying a larger rate, even though they're not at risk at all based on the elevations. So the maps are 100-year-old floodplain maps in a 50-year-old program that is trying to solve today's realities. So it has to be modernized.
Great. So to be a sensible assumption that if we want to be able to protect people from flooding, to be able to reduce some of the costs, maybe we ought to use good technology, actually get the mapping up to date. That's a fair statement to be able to make.
And may I add, it would save some homeowners $500 so they would not have to get a certification from LOMA to show that, a letter of map amendment to show that they are on higher elevation, because now the mapping is accurate.
Great, and I appreciate you bringing up that point in terms of being able to reduce some of the costs that we have. And just kind of looking over some of the bios here, maybe this is a good question for Mr. O'Mara and Mr. Lehman. Could a more robust private market for flood insurance help combat the challenges that we have of insuring flood risk?
Absolutely. We think that having more private options, having more consumer choice and more transparency would allow two things. You'd have more private capital in the market, which would reduce risk to taxpayers, and simultaneously you could focus the program more on vulnerable frontline communities that frankly need the help more than some folks that can afford other alternatives.
Great, and so just to follow up, and then Mr. Lehman, you might want to be able to speak to these as well.
Right.
So would a more competitive flood insurance market actually lower the costs, as Ms. Guzman was talking, is important for consumers?
For many consumers, yes. Not for everyone. There are some people who are heavily subsidized in the NFIP, and a private market would be more expensive for them. But for the vast majority of consumers, they are paying too much.
Great. So opening up some competition, having better mapping, maybe we can actually achieve a goal that everybody agrees needs to be achieved.
Agreed.
Great. Thank you. I have no more questions, Mr. Chairman. I yield back.
Thank you. The gentleman from Texas, Mr. Green, the chair of the Subcommittee on Oversight and Investigations, is recognized for 5 minutes. Thank you, Madam Chair. And I thank the witnesses for appearing as well. Flooding is something that we experience almost routinely in Houston, Texas. We've had a tax day flood. We've had a Memorial Day flood. And of course, we've had what I hope is a once-in-a-lifetime flood, Harvey. We know what flooding's all about. I want to assure the chair lady that I support this legislation. I believe that it's going to be beneficial to the people that I represent. And I want to make sure that when they suffer these great tragedies, that there will be help for them. No private market can provide an affordable policy for flood insurance victims. The private market has not stepped up to provide an affordable policy. Of course, unless you have a federal backstop. Well, if the federal government is going to provide the backstop, we ought to have a lot to say about the amount that will come off of the top. It is not enough for us to take the lion's share of the liability and allow the assets to be enjoyed by someone else. So I support the chair lady's legislation,
and I do so because it will benefit my constituents, many of whom are still in recovery. I yield back the balance of my time.
Thank you. The gentleman from Texas, Mr. Williams, is recognized for 5 minutes.
Thank you, Madam Chairman. Thank you all for being here today. And I start off every hearing with a simple yes or no answer from all of you, and I'll start with you, Ms. Lamb. Yes or no, are you a socialist or capitalist?
I defer to the next one in line.
Thank you, Ms. Lamb. Thank you very much. You don't have to answer that.
Are you
Am I a socialist or a
capitalist?
capitalist?
I thought it was yes or no.
Yes or no?
Yes, ma'am.
Yes.
Okay, thank you. Sir?
Capitalist, sir.
Thank you.
Yes.
Yes.
Socialist or capitalist?
Capitalist.
Thank you. Yes, ma'am.
I thought this is a yes or no question, correct? Yes.
Are you a socialist or are you a capitalist?
I'm just following direction, yes
Okay.
or no, so yes.
Yes, sir. Next.
Yes, sir, I'm a capitalist.
Yes.
Thank you. Thank you for that. I, too, am a capitalist and a small business owner who knows the value that competition brings to the marketplace. When the flood insurance program was created in 1968, the government believed that we did not have sufficient data or technology to accurately assess risk for this product to exist in the private sector. Mr. Lehman, what has changed since 1968 in terms of data, technology, and the market's ability to assess risk?
Sure. So there has been an emergence of a market called a technology called catastrophe risk modeling, which does provide significantly more clarity to insurance companies and on the landscape of risk that they face. The nature of the insurance market itself has changed. It is much more global. They are able, insurance companies and reinsurers are able to spread risk around the globe. In the old days where you had a county mutual somewhere in the Mississippi River Valley, if there was a flood, all the policyholders would be hit at the same time. That is not the case today. And so these things have made insurers more able to write private flood at a time when they were not able to in the 60s. It should be clear, though, that we do still need the NFIP. And when we talk about things like cherry picking, it is not the 5 million people who have NFIP policies right now are not the entire universe of people who need flood insurance. There are many more people who need flood insurance. There was the University of Bristol study early last year that said something like 41 million Americans are actually at risk of riverine flooding. The current maps that we have from FEMA only show about 13 million. So we need to about triple the number of people who have flood insurance.
Mr. O'Meara and Mr. Hedrick, I'd like to hear from you too on that.
Sure. As insurance companies are creating their rate structure, they are modeling with technology, running through thousands and thousands and thousands of simulations, different possible weather events, and what would the outcomes be. That computing power didn't exist 10 years ago, let alone 50 years ago. And that's what is allowing the insurance companies to actually run these models, prepare and run these models to come up with a set of rates that they feel they can rely on.
Okay, good.
And the only thing I would add to that is that the computing power is also in the surveying work. And having LiDAR technology, we can figure out exact elevations, understand the systems, and overlay climate data and actually understand the intersection of what are likely outcomes for some of these communities that we didn't have access to. And we're drawing topo maps with lines 50 years ago.
Okay. I think that a great way to help solve the issue would be to have better flood mitigation programs in place. I co-sponsored a bill with Representative Charlie Crist of Florida to set up a revolving loan fund in order for the communities, homeowners, and businesses to take the necessary steps to prevent serious flooding problems before they occur. This is just one example of a mitigation program that will ultimately save taxpayer dollars. Ms. Smith, can you give us your opinion on using a revolving loan fund as a mitigation technique?
Yes, thank you for the question. We think that this has great potential. States have experience using state revolving loan funds for clean water, for drinking water, some places for energy efficiency. We can pay a little to save a lot. We have been being very much penny wise and pound foolish, And if we put the money up front toward helping communities mitigate now, there will be a payoff in the future.
Okay, thank you. I yield my time back. Thank you for being here.
Thank you. The gentleman from Florida, Mr. Lawson, is recognized for 5 minutes.
Thank you, Madam Chair, and welcome to the committee. One question I have, Mr. Hendrick, is as someone I know that's in the insurance business, and earlier you heard Congressman Posey talk about the private insurance industry, and I looked at some of those results yesterday where the rates was much cheaper. What do you think contributed to those rates being less than what it is with the NFIP program?
My experience, the rates in the private market are not always cheaper. In many cases, they are. The difference usually comes from either better data in order to price and select risks. Some of it comes from the fact that the premiums that private companies are charging are not inflated for some policyholders to offset subsidies for other policyholders.
Okay, and how would you explain it, like in Florida, where we have a large percentage of people that I think maybe 40-some% that have flood insurance compared to other areas around the country?
There's certainly more awareness of the risk of flooding in the state of Florida than in many other places. I mean, usually a community that's experienced a devastating flood is aware, but what I find, I have a lot of clients who have primary homes in other parts of the country, and they come down to my Southwest Florida and have vacation homes, and the risk of flooding is not lost on them. In fact, many of them are paying cash for their homes and still buying flood insurance because they understand that risk. When you can stand on a barrier island and look at the water and on one side and then turn around and look at the water on the other side, it's pretty clear that you're going to have a risk of flooding. And throughout the state, we get so much rainfall, and we've had, of course, Hurricane Irma that's come through recently. I think that there are a lot of things that have increased awareness of Floridians. But I would say at the same time, the state legislature in Florida has done a number of things to encourage the growth of a private market, and that has created more choices for consumers.
Yeah, and as you know, we created Citizens, you know, in Florida, and then as time went on, we wanted to depopulate Citizens so it could go to the private market, and we've seen it happen. And the private market is saying that they still can take a lot more risks and policies from Citizens that we have in the state of Florida. Ms. Lamb, currently the federal government regularly pays out billions of dollars for disaster relief in the aftermath of major flooding events. Research shows that we can significantly reduce the amount of costs incurred by the damage as a result of flooding by investing in more mitigation. In Jacksonville and Duval area a year ago, where we had a lot of flooding, I mean, it caused a lot of businesses and a lot of homeowners who didn't have a store, and it took months and months to get it up and going again. And at one time I proposed money for the Corps engineers to invest in mitigation that could help solve a lot of the flooding problem. Can you talk about what we know about cost benefit of investing in mitigation and the specific example of mitigation projects that have helped prevent flooding and damage in other areas?
Thank you. Mitigation is a huge benefit when it comes to flooding. Many would agree that the water's supposed to be there, the people are not, but they're there, so what are we going to do about it? We need to mitigate. We need to find ways to assist them with either elevating their homes or buying them out, doing some other form of mitigation. An example that I have from South Carolina is we had in 2016, Hurricane Matthew devastated the PD region of South Carolina, specifically Marion County, and many homeowners in Marion County were able to elevate their homes, and they used the high water marks as their goal of how high to get their home to. When Hurricane Florence came through again, some of those homes were high enough. And while the citizens had to leave their homes stayed high and dry, and thus making the recovery process easier by mitigation.
The gentleman from North Carolina, Congressman Budd, is recognized for 5 minutes.
Thank you, Mr. Chair, for hosting this hearing, and thank you to our witnesses on this second panel for your time today. Mr. Heydrich, I'd like to start with you. In your testimony, you described the Write Your Own program as necessary and outlined that the Big I would oppose policies that harm the Write Your Own program. I certainly believe that we should always encourage more private sector participation in the flood insurance market, ideally through private policies. And while there's a gradual uptick in private sector offerings, I'm concerned that the number of Write Your Own companies has dropped from about 117 down to about 60, last I understand. So looking at the past couple of storm seasons and how they've impacted my home state, North Carolina, I think we can all agree that more property owners need to purchase flood insurance. I've heard that this morning. So in your opinion, Mr. Heydrich, how much do policy holders benefit from the Write Your Own program? And what do you think the impact would be if the trend of companies leaving that program without a corresponding increase in private sector options continues?
Thank you for your question, Congressman. Probably the best way that I can do this is to contrast it with the direct servicing program that the NFIP operates. Over 80% of the NFIP policies are written through the Write Your Own program, and that is because the support that the Write Your Own program provides to agents is much, much more effective than the direct servicing agency. It takes much longer for me to get problems solved and respond to clients, and those are the things that get clients to buy and retain their coverage. The Write Your Own companies do a lot more training, and they have an incentive to see their book of business grow, to have more customers insured for the peril of flood, which is the reason why we're all here, is to try to ensure that as many people as possible have insurance and have the ability to recover after a storm as a result.
Understood. So I strongly assume you would agree with me that the committee should be looking for ways to strengthen the Write Your Own partnership and to provide additional consumer choice via private insurance coverage?
Yes, sir.
Thank you. Despite protecting more than 5 million Americans from the risk of flooding, the NFIP is in horrible fiscal shape due to mismanagement here in Washington. And the bottom line is that we know the NFIP's inadequate rates, which do not reflect the actual cost of living in a high-risk flood zone, are the source of many of the program's problems. Yet the discussion drafts before us today are in no way, shape, or form even address this issue of rate inadequacy that is fundamentally plaguing the program, which has ultimately caused policyholders to be strung along from one short-term extension to the next. While the drafts before us today fail to do so, Mr. Heydrich, in your testimony, you mentioned the administration's efforts to modernize NFIP underwriting via risk rating 2.0. This seems like a good first step, but in your opinion, will it go far enough? And from my perspective, it seems that until my constituents stop funding subsidies for folks to live on the coast and high-risk areas, then we're going to have a program that continues on a fiscally unsustainable path. So, Mr. Lehman, I'd also be curious to get your thoughts on this as well.
As I mentioned in my testimony, my proposal is to cease writing new construction. If you're not making the problem any worse by actively encouraging people, making it easier for them to build in flood-prone areas, then over time that you'll see those rewards in the program becoming more sustainable. The program itself is still not going to be sustainable. Part of the problem is the fact that whenever we've wanted to assist people, whether it be for affordability reasons or the other subsidies, we've done it by discounting rates. So you're not bringing enough premium to ever be sustainable, and you'll forgive this debt today, but it'll come back for sure. There's no question about that.
Thank you all again for your time, and I yield back to the chair.
The gentleman from New Jersey, Congressman Gottheimer, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you all for coming in today to testify on this critical issue.
Getting a long-term bipartisan reauthorization of the National Flood Insurance Program is not just vital to the country, but it is incredibly important to the people of New Jersey, my state. More than 225,000 homeowners in New Jersey rely on the National Flood Insurance Program to protect their families. Towns in the 5th District, like West Milford and Lodi, are flood-prone. When their homes have been damaged or destroyed due to the flood damage, they have been able to repair or rebuild them thanks to the National Flood Insurance Program. I've seen firsthand how essential this program is to the people of New Jersey's 5th Congressional District. They cannot continue to live in uncertainty when it comes to flood insurance. They need more common sense reforms, and we need to deliver them through a long-term reauthorization that provides responsible governance and doesn't have policyholders drowning in premiums. We must utilize innovative technologies to improve mapping, modernize flood insurance, and save taxpayers hard-earned dollars. I look forward to your answers on how to improve the National Flood Insurance Program, and appreciate you taking the time today so far to tell us how we can work with our colleagues here on both sides of the aisle to get this reauthorization done. If I can ask a specific question about Hurricane Sandy, because in late October 2012, as many of you probably know, Superstorm Sandy made landfall in the United States. The storm, which is the second costliest hurricane in United States history, resulted in more than $65 billion in damages and destroyed or damaged 346,000 homes in New Jersey. New Jersey felt the destructive power like no other state. Economic losses were estimated to be approximately $30 billion. Businesses were destroyed, people lost their jobs and homes, and most regrettably, 37 people lost their lives. Yet, in the aftermath of Sandy, numerous policyholders have claimed that they may have been underpaid. There have been findings of fraud, altered engineering reports, and inadequacies in FEMA's oversight and controls. This is beyond unacceptable. Can you all discuss some of the steps that FEMA has taken to address these problems and explain what more needs to be done to prevent this from ever happening again? And I'll defer to any one of you who wants to take this. Mr. Heydrich, thank you.
Sure, I'll be happy to answer. Thank you.
Thank you.
What happened in Superstorm Sandy is unacceptable, and everybody in the industry would agree with that. However, since then, we've had 6 storms in the last 2 years. Harvey and Maria, in particular, the NFIP received 120,000 claims, settled 92% of them within the first 90 days, paid over $10 billion in claims, with less than 1% of those claims going to litigation. I think that result shows a lot of progress that the NFIP has made. It is a different management team that's there. It's not the same people that's there. They've got better technology that gives them better data, that allows them to provide better oversight of the Write Your Own program and provide better solutions to consumers.
So you can get ahead of fraud, and some of the things that we found in Sandy, we figured out what was causing some of those issues?
Every insurance company has to deal with fraud in every industry.
Right.
But having better technology that provides FEMA management with better data and more timely data, during Sandy, I believe they were looking at information that was 6 months old to try to manage their day-to-day operations.
And if I could turn to flood mapping in the time that I've left, I've heard from a number of my constituents when they believe their property is being improperly mapped, by FEMA. I know we've addressed this a bit because typically the only recourse for these constituents is costly and very time-consuming, as you know. And in the 21st century, there's no reason why we can't utilize 2019 technology like GPS mapping to improve the way FEMA maps property in New Jersey's 5th and across the country, right? We obviously, in our phones, we can do incredible mapping. There's no reason why we can't actually figure this out for the insurance program. Do you think NFIP's map revision process can be improved, and do you support the reforms that improve the NFIP's map revision process? Mr. O'Mara, thank you.
So in my previous life, I was Secretary of Natural Resources in Delaware, and one of the things we did is we used LIDAR data to have kind of 2-meter data for the entire state for a couple $1 million. If you had property-level data across the entire country, you would lose all those fights over appeals. You folks wouldn't have to provide their own maps. Folks wouldn't have to spend hundreds of dollars to get surveyors to do the additional work. If you had that level of data with transparency, you would transform the ability for folks to understand the risks they're facing.
Right, it's there, right? This data is there.
Yeah. So there's some places you're going to have to fill in the gaps, but yeah.
Right, Ms. Guzman, did you want to add to that?
Absolutely. Also, the buyer could do due diligence. People could actually make an informed decision before they make a purchase because they could actually see what the risks are up front. Without that data, right now they're actually kind of flying blind.
Right, it's a guessing game.
Yes.
Right. Ms. Smith?
I would add just a caution that I think we now know that where it rains, it can flood. And I think one of the problems that we have is that people assume that the maps are a prediction. And the maps can give you a relative sense of risk, but they truly can't predict precisely. So we need We need improved maps, and I do believe FEMA's moving on using new technologies, but we need to stay on top of the risk.
Thank you. Yield. Thank you.
Thank you. The gentleman from Ohio, Congressman Davidson, is recognized for 5 minutes.
I thank the chairman. I thank our witnesses for extended testimony, interactive Q&A, and really good expertise in offering ways to improve the current National Flood Insurance Program. I think it's safe to say this is one of many federally crafted programs that if you looked at it as a clean slate, no one would design it to work the way that it works today. Maybe someone, but I don't think very many people. And so as we look at how to go forward, it always strikes me as odd that there's so much resistance to change federal programs that everyone acknowledges don't work exactly the way they should. And I've listened to a number of you talk about the expected future impact, and a number of my colleagues talk about the expected future impact of climate change. And as is generally agreed upon by people who embrace the most extreme impacts of climate models, flood becomes an increasing concern. And so I'm particularly interested in how we would want to remain static with the reauthorization of a admittedly broken program in light of its admittedly broken current results, its current debt, and the idea that we'll just forgive that. We'll keep operating it, maybe even subsidize things more than we already have, but we won't accrue the debt because we're just going to spend the money. Why would the government keep operating a program in that manner? And Mr. Lehman, I just wonder, if you had to go actuarially sound, what sort of changes might you make in view of the most alarmist positions on climate models or in the result of just actuarial soundness?
So the program as it currently is structured, the subsidies and grandfathering are not based on need, right? So they're largely based on the age of the home and how old your map is. And neither of those is there any good public policy justification for. So moving everyone who can afford it to risk-based rates has to be a priority. There will be people who need help. There will be people who need assistance. So we don't oppose creating a targeted, means-tested affordability program to help those people. It should be outside the rate structure. It should not just be a discount. It should be a voucher. Ideally, it should be a voucher that you could go and buy private insurance with as well, and not just the NFIP, because lower-income people should have that option of choice as well.
So if I take it correctly, you're saying let's let the market function where it can, and we'll use actuarially sound underwriting principles.
Yeah.
And then where not, it's almost like you're advocating for something akin to the housing market, though that too is distorted by numerous federal programs, where we might actually have actuarially sound mortgages for lots of America, and then we do believe in a social safety net, so we have a fairly large federal housing program.
We want people to respond to the price signals, right? We want people to build where it is appropriate to build and not build where it is not appropriate to build. And we can provide some assistance to people who need that assistance. But nonetheless, both the market and the climate models are telling us the same thing. They're telling us that risk is increasing, flood risk is increasing. We need to be prepared for that. And some of that preparation is going to be painful.
And so it is painful when someone would have to move out of a home, whether it's just for repairs or for remediation. We'll not just rebuild the house, we'll rebuild it on stilts or with tiles that drain the area better. Then we'll rebuild it a second time, then we'll rebuild it a third time. Does anyone find it unreasonable that we would put a cap on the number of times we would rebuild a property? And I'll just go down the line. Ms. Lamb, is that unreasonable?
No.
Mr. Heydrich?
No, the private insurance company is not going to continue to insure repetitive loss properties either.
Ms. Smith? No. Ms. Guzman?
No.
Mr. O'Mara?
No.
Mr. Lehman?
No.
Okay, so uniform consensus that at some point we have to say, you know what,
this place is going to flood, and we should just quit rebuilding it. Unfortunately, that's been one of the more controversial provisions to be able to move past this body. So thank you for your expertise, and I yield.
The gentlewoman from Michigan, Congresswoman Tlaib, is recognized for 5 minutes.
Thank you all so much for coming. This is such a really important issue in my district. Since 1978, more than, I think, $75 million in damage payouts have been made to Michigan homeowners. And FEMA has bought out, I think, 226 Michigan properties in a flood zone, including Ecorse Creek in my district, in the 13th Congressional District. Many of us have heard, from constituents, I'm sure you as well, from your customers, where they don't believe, or they believe that the property is being improperly mapped by FEMA. And one of the constituents of mine in Dearborn Heights got notice to purchase flood insurance, even though he lives half a mile from the creek, and his property has never flooded. So he paid hundreds of dollars to hire a surveyor, to contest it, and was very successful. But that is not going to be the case for a lot of my residents. Typically, the only recourse is, very time-consuming and costly, as a lot of my colleagues had mentioned. And so, in regards to how complaints are put forward and how they're addressed, if you were to pick kind of a process to be able to contest or to make a complaint in that they don't, shouldn't hire it, or maybe it's around affordability or the process in itself. And Mr. Hendrick or Ms. Smith, anybody that can be able to answer that. And I apologize if it's asked before.
Thank you for the question. I think you're asking about is letter of map revision, letter of map amendment processes. Okay, thank you. On Sanibel, it's even more pronounced, right? Because a letter of map amendment is simply file an elevation certificate, and you're basically showing FEMA that you said that I'm below the base flood elevation, I'm likely to flood, but I have this document from a surveyor that says I'm actually elevated high enough. A letter of map revision is much more complicated, requires engineering work, and costs thousands and thousands of dollars. But I can tell you that in the community of Sanibel, my home, in the last 3 years, there have been 30 letters of map revisions that have been created, and every single one has been approved. The total costs, I don't have the exact number, but back of the envelope, I could probably say it's probably between $500,000 and $1 million that policyholders and small businesses and condominium associations have paid to get that done. It's an expensive appeal.
Yeah. And Ms. Lamb, you probably saw this, and many of you have. In 2017, the Inspector General reported they found like 58% of all FEMA flood maps to be inaccurate and out of date. And what are some of the hindrances? Like, what are some of the challenges in FEMA fulfilling this requirement? And have you heard of them? In this, I'm new here. Have they talked about pilot programs, anything like that, to address this issue around inaccuracy with mapping?
Inaccuracy with mapping comes from multiple avenues. For example, in my state of South Carolina, we have LIDAR. We have LIDAR for the entire state. However, it's out of date now, so it's time to fly it again, and the funding is limited from multiple resources, including FEMA and the state. The other thing is gauges. Gauges are really important because gauges increase the precision of your mapping. My state, very limited in the number of USGS stream gauges, or really any stream gauge, very limited, very much needed. Those are things that go in. FEMA knows that.
And what is there anything other than, and maybe beyond what the legislation is providing, what can we, as a new member, I want to be able to push this forward and almost require it as a must before they proceed? Mapping is key. I mean, that's the basis of.
I think one thing that can be pushed forward as well that we have seen is pushing forward changes in technology. 2D mapping is something that we personally have seen, that we produced a 2D model in Horry County, South Carolina, where Myrtle Beach is, and when Hurricane Florence came through, it matched almost perfectly. So we've been able to, there's some new technologies out there, I think, as a new member, pushing forward new technology and making it easier for FEMA through statutory requirements and some of the policies encouraging them to move that direction?
In short of time, just really quick, it was very, very troubling for many of us as Michigan laws require these disclosures. But then many folks are not really required, like the law does not require the seller disclose whether the property is mandated to have flood insurance. Do any of you believe that we should try to standardize disclosure requirements to protect consumers and homeowners alike?
Yes, absolutely. We think it would be helpful across the board so that people would know about past flood risk, past flood damages, and about whether the property is going to be a repeat loss property and what the flood rates would be.
The gentleman from Illinois, Congressman Caston, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you all to the panel. I'm glad we've taken so much time talking about mitigation today, and I appreciate the inclusion of language within the legislation that would make property acquisitions an eligible activity for ICC coverage. I think this could, emphasize could, help to jumpstart efforts to help low and middle income folks relocate away from vulnerable areas. I think that people who ask whether you believe in climate change, it's sort of like asking whether you believe in gravity. We have the reality of the world we live in right now, that insurance is designed to cover something that is expensive, rare, and unpredictable. And flooding continues to be expensive, but it's no longer rare and it's no longer unpredictable. And any actuarial product to solve that is going to be increasingly insolvent. We just have to deal with that. And I'm guessing from the nods on the panel that I don't need to ask anybody to confirm. If anybody disagrees, please interrupt. I want to direct my first question to Mr. O'Mara. Specifically on mitigation, it seems like we've got a lot of agreement that we should do this. The Smarter, Safer Coalition has specifically stressed the importance of nature-based approaches to resiliency. Can you provide a little color on exactly what that is for us?
Sure. So I'll use an example of my home state of Delaware. We're sinking, we're facing sea level rise, you've got more coastal storms. Places that have healthy wetlands that can absorb millions of gallons of water are less likely to get, the communities behind them are less likely to get flooded out than places that have paved over everything and know where the water to go. And if you use an example from Texas, places that had some prairie, places that had some level of natural infrastructure where you could basically absorb and slow down both the volume and the velocity of water, did much better during these storms. And so, a lot of us have said this today, every dollar we spend on that is $6 of savings. And we'd like to see this be a huge part of any infrastructure conversations across all the different committees of jurisdiction.
Can you speak to how ICC funds could be used for property acquisitions to facilitate those kind of outcomes?
Yeah, so there's been examples at the state level in different places where folks have done, kind of buyouts or different things. Again, compensating folks so they can relocate and have a different community, but making investments in those natural solutions, headwaters of watersheds, some cases reforestation, some cases it might be more dune systems, but using those dollars to actually invest in those kind of solutions. And then all of a sudden you create a solution at a regional level instead of just property by property, because you have to do this stuff in addition to like raising elevations. But if I can make one investment that helps 500 houses, that's a better investment than 500 individual solutions.
So all of that, I think, sounds to me like a fairly permanent solution. Can you talk about what we need to do to make sure that if we make those changes, we don't end up with people basically rebuilding on the same land in the next cycle?
Yeah, I think there's questions over if government's going to play that role of intervening, making sure there's covenants put on those properties to make sure there isn't construction in the future. Some states are using things like the Land and Water Conservation Fund and being creative, trying to have different resources and turning these areas into parks in some cases. There's been ideas before about not having some of these be eligible for some government program if you are rebuilding in these areas, but we would love to work with you to make sure that we don't kind of do the same idiotic things over and over again.
Okay. With the bit of time I've got left, I want to talk to equity, because obviously once you talk about relocating people, there's an inherent equity issue that's there. There was an NPR report recently that said that the current property acquisition programs are not equitable, and that money is not necessarily doled out to those who need it most, but those whose property is worth more. Question for Ms. Smith. What do we need to do to better structure those programs to increase the accessibility to everyone who needs that pre-flood mitigation, but is done in a more equitable fashion? And maybe just to tie the second part on, does the ICC coverage for property acquisition facilitate that expansion in an equitable way, or how might we need to adjust it to make sure it does?
For the folks who are low-income folks, I think you start behind when we start with the NFIP, because as the affordability studies that FEMA has produced show, the people who have low incomes tend not to buy the insurance. So if you have mitigation programs that are only addressing the problems of insured properties, they are going to not help the low-income people. So there are a variety of things. So that's why we think that the community level kind of mitigation, the protecting or restoring a wetlands that will stop the water from flowing over a large area, the kind of preservation, kind of stormwater drainage improvements that can help a variety of people are some of the best things that can be done for a larger community. Actually, as I think of it, Mr. Scott, in Atlanta, the Falcons, what I just found out was the Falcons' new stadium has a cistern, was built with a cistern as part of the stadium that will take 80% of a 100-year flood. So there can be solutions for everyone.
Thank you. I yield back the lack of my time.
Sorry.
The gentlewoman from New York, Congresswoman Ocasio-Cortez, is recognized for 5 minutes.
Thank you, Mr. Chair. I just have to, I can't resist commenting on the earlier question, which I can confirm happen every hearing, socialism or capitalism. And I'm just thrilled at the adaptation today that the follow-up was yes or no. Because I do think that the yes is a great answer, because mixed economies are a thing. And I'll also like to note the irony of the fact that we are gathered here today in bipartisan support of a socialized insurance program that is designed to help people where the private market fails to protect homeowners. So I just can't go on without noting that, because I love it. It's just, I love it. Anyways. I'll move on. The National Flood Insurance Program was for a long time solvent. It paid for itself. It was able to help people without. It was able to help people at a non-for-profit basis. And while some years it was under, other years it was over, and overall it leveled until 2005, which is when Hurricane Katrina hit in Louisiana, which added a $19 billion cost. And at the time, many folks thought that Hurricane Katrina was a once-in-a-generation event. We'd never seen this before, and it will probably never happen again at the same level of catastrophe. But then came Hurricane Sandy in New York, and we were told again that this was a once-in-a-generation event. And then came Hurricane Harvey in Texas, Hurricane Irma in Florida, Hurricane Maria in Puerto Rico, 3,000 dead and outages for 11 months, Hurricane Florence in North Carolina, and Hurricane Michael impacting the large swaths of the southeastern United States. So my question here, I'm interested, and I'll start with Ms. Smith, I'm interested in the role of the NFIP in the broader constellation of preparedness. Because we know that in this larger trend of hurricanes that this is not an accident and that these are not once-in-a-generation event. This is not a once-in-a-generation event. This is what climate change looks like now in the present day. So are there any other programs designed to work with the NFIP to prepare for the damages to come ahead of time and not after a storm?
I would say there are, but they aren't big enough. They've been small. FEMA has administered a small pre-disaster program, but it hasn't just not been enough. Okay. And we have to get ahead of the game. I think we can also change the way we have land use regulations in the NFIP to help communities make smarter future decisions.
And I'd like to go down the line. In each of your all's professional opinion, is the NFIP currently structured to foresee and accommodate and prepare the damage that will come to people's homes and communities due to climate change? I'll start with Ms. Lamb. And that's an actual yes or no.
Actual yes or no? I would say not exactly.
It's not currently.
There are some areas yes, some areas no.
Okay. Mr. Heydrich?
I would agree with that.
No.
No.
Yeah, not even close.
No, and if I can just expand a little bit, it's because all rate making is based on the past, right? So we don't, this is what insurance companies do as well. They might do a catastrophe model to see how the world is changing in the future, but rates are based on the past and they're an extrapolation to the future. If the future changes, then the rates don't reflect that.
Right, and so we
May I add, also we're not addressing urban flooding, which we may say that 1,000-year storms now are the new normal.
So it seems like there's kind of this fundamental paradox where here, this area of insurance cannot operate the same way as other areas because the future is virtually guaranteed with broad scientific consensus to change. So in my brief time left, I have here from New York City a 2018 floodplain map. So these are the floodplains predicted from last year. They also provide a 2050 floodplain map and a 2100 floodplain map. So I can buy a home and see that if I want to pass it to my kids, it'll be underwater. Ms. Smith, is this available in all parts of the country?
No, it's not. And I think there are some other places that have started to do similar, but the more we do of that, the better.
And when people buy a home, do you think that they should have this information printed out right there, handed to them?
Are you asking me? Yeah, absolutely. First of all, it's about due diligence and making a smart...
Gentlewoman's time has expired.
Thank you.
The gentlewoman from North Carolina, Congresswoman Adams, is recognized for 5 minutes.
Thank you, Mr. Chair, and thank you all for being here today. I want to ask Ms. Cox-Lamb, the NFIP is currently $20.5 billion in debt, and every year policyholders pay approximately $400 million in interest to service the debt. Do you believe that Congress must address the NFIP's debt, and do you think that it makes good sense for policyholders that may be already suffering from affordability challenges in a cash-strapped program to pay $4 billion just in interest payments on a debt that NFIP will never pay?
Thank you. I believe that forgiveness of the debt is important. We've got to forgive the previous debt because you're 100% correct. We're never going to get ahead. But getting rid of the current debt and then processes and policies to move forward to make the program more solvent would be of great benefit.
Okay, thank you. So Congress has been grappling with the issue of affordability of flood insurance for a long time. So do you think the discussion draft that we're considering today which would stand up a pilot program to offer means-tested assistance for low and moderate income households to help them afford flood insurance, you think that's a step in the right direction?
Yes, ma'am.
Are there other potential solutions that you think should be under consideration?
I think that we just need to keep in mind that anytime we're doing a better approach that helps low to moderate income be able to either obtain insurance or community-based is a good way to keep going. And building the capacity at a state level, I think, is also important. We mentioned earlier the Community Assistance Program, which funds floodplain management. That's where the rubber meets the road at a local level, because that assistance is provided to a community can help them better prepare their citizens for the floods that are coming in the future.
Okay, you mentioned local. Last year, as Hurricane Florence came into my district of 850,000 residents there in Charlotte, one thing we had in our favor, and it sits in Mecklenburg County, one of the few places in the county that's begun emptying out its floodplain, reducing risk by helping to move people and homes from the most vulnerable neighborhoods. And I'd like to commend my good friends on the City Council and our Mayor Lyles, for their foresight and thoughtfulness in tackling the issue. But Mrs. Smith, could you speak about the importance of local communities having access to programs like FEMA's buyout program, which can help to reduce burden on the NFIP?
Absolutely. There have been many communities like Charlotte, Mecklenburg area who have realized a long while ago that they needed to change where people were living, change where new development was going. For example, the city of Birmingham, Alabama has had buyout programs for over 20 years. They think it's 20 years of buyouts they think has avoided $60 million in losses over that time period. In Florida, the money that has come from FEMA, the state is tracking how many losses are avoided. And after Matthew, they think that the projects they had done previously meant that they had saved probably more than 80 million in losses in that one storm. So communities, if they can leverage a bit of money from the federal government, it's, you know, it will be money well spent.
Right. What about some of the limitations to the current program?
Largely funds. I mean, and the difficulty is that, again, right now, the money flows to people who have the flood insurance, if it's to individuals, but trying to get communities money ahead of time so that they can think through and plan for what they will do rather than if you wait till after the storm when everyone needs to get back in their home, you know, and you just are in a rush as opposed to making smart decisions about where and how to build again.
Okay, being proactive, I think, is the best way. Thank you very much. I appreciate your responses, and all of you for being here. I yield back, Mr. Chair.
The gentlewoman from Texas, Congresswoman Garcia, is recognized for 5 minutes.
Thank you, Mr. Chair, and thank you all for sticking it out with us. Looks like we're coming toward the end. And first, let me just kind of underscore some of the points that my colleague from Houston, Mr. Green, made earlier. You know, I think Houston is beginning to feel like a piñata. We have been beaten up by one flood after another and after the other. And I know for me, in my district, we are still recovering, and we still have some families who have not been able to return to their homes. And regrettably, many of those are the folks that we really need to help. Because the median income in my district is about $42,000. When you look at the homes in Harris County that were flooded, there was 154,170 homes flooded in the county. Many of those were in my district. Only about 55,570 had insurance. And I don't know how much was FEMA, through the flood insurance program, how much was private. But the bottom line is that's only 36%. About 1 out of 3. So that means that the other 2 out of 3 have no coverage and have to go somewhere. I'm not one of those to suggest that, well, they got to figure it out themselves, they got to eat cake, they got to do it on their own. I do think we need to do something to make our insurance more affordable, not only private insurance, but more importantly, our national program. And I'm sure that, how many of y'all are aware of the affordability framework document that's been prepared? And when I reviewed it and looked at the options, I looked at 4. It seems to me that the chairwoman is correct that we probably do need income means insurance program so that we can assist those that are having trouble getting insurance. We already have so many people trying to decide whether they get their prescriptions or they get to pay their electricity or get groceries. Well, at a time like this, you have additional burden of, do I now make a choice of trying to get some flood insurance so that I can be covered next time? Because many of these decisions are made after the fact. So my question starts with that. I mean, do you all agree with this framework? In which one of the 4 choices programs would you do? Or are you happy with the chairwoman's 5-year demonstration for a means-funded program? And I'll start with you, Ms. Smith.
Well, I would say it's a good place to start, the chairwoman's approach, because she's trying to sort of thread a needle that we're going to try to help low-income folks. I think clearly we need FEMA to run the numbers against what will happen. The difficulty is that the program is so deeply underwater in debt right now that there's not much money to work with. So I think we want to try to help the low-income people, but also make some changes so that we don't face the shortfall.
Okay. If I can ask the rest of the panel, and this time yes or no in the interest of time, because I have one more question and very little time left. Ms. Guzman?
Yeah, we support the provision. We want to, first of all, we want to make sure that when the rates go up, they go up gradually. We don't want people getting sticker shock and then being faced where they're now faced with that they can pay. So yes, you support the
program?
Yes.
Well, great. Mr. Omar?
There wasn't enough focus on mitigation. We want to see more to reduce risk on the front end.
Okay, so you're a yes or a no?
I mean, yes, but again,
okay, that's fine. Next.
In my written testimony, I do have some comments on the program as it's proposed. I support the idea, but not necessarily the structure.
Okay. Ms. Lamb?
Yes, with means tested areas.
Mr. Hedrick?
The Big I hasn't formulated a specific support for any one specific proposal, but looks forward to working with the committee to develop one.
Okay, and then I wanted to follow up with you, Ms. Guzman. One of my colleagues asked about disclosure, and I believe you answered about full disclosure, but Ms. Guzman, you didn't. I think you represent the realtors.
In review, every state has disclosure. So every state does have disclosure, but disclosure is merely check the box. What we want are more accurate mapping. We would like to have access to FEMA's database where people can actually see if those claims on that property were made, so that they can see.
You do favor, your organization does favor disclosure of, yes, the house was damaged and it was this much in these areas?
The only way that's going to be available is if by modernization of the NFIP program. That's the only way it's going to be available. Currently, as it is right now, it is not.
Okay. Does anybody else want to jump in on this one? No? Well, there it is. I yield back the rest of my time.
The gentleman from Virginia, Congressman Riggleman, is recognized for 5 minutes.
Thank you guys very much. It looks like I'm last, I think, maybe, looking around. Is that possible?
Not quite.
So, hey, I don't know if this is a fun question. But I've been reading some of these provisions, and I just want to let you know I live in a very rural district, 5th District of Virginia. Starts about an hour south of here, goes all the way to the North Carolina border. We talk about rural, you're talking about by-right structures. For instance, I have a by-right farm structure zoned A1 in Virginia. And this is a question, if it's not answerable, it's okay, because it's actually curiosity as I was reading this section, that holds special items. So I own a distillery. So it has about 400 barrels of bourbon and whiskey in it. But there's a lot of structures like that in the 5th District that are allowed to be built for special use that it's really not defined exactly what it is as far as residential or commercial. So if you have these facilities which are neither residential or commercial structures and they serve a specific and unique function based on what I see in the 5th District, which has a lot of special and unique functions with special use buildings that are built by right, and we can start left to right. It says, I don't want to take real long because I know you're tired, but this is actually a curiosity question. And I think this is in Section 9, agricultural structures and special flood hazard zones. By the way, I have an intelligence background in GIS, so this gets really exciting for me. And I know I just nerded out on that a little bit. But can you provide some insight from left to right, on this issue? Because in your opinion, does this legislation properly address all those concerns or any concerns about by right structures with special use that are neither residential or commercial? I know that's a very specific question in Section 9, but it's near and dear to my heart in our rural district in the 5th District of Virginia. We can start right to left with Mr. Lehman, or Mr. Lamb, go right to left, Mr. Lehman. And if you guys, 30 seconds, I know we have 3 minutes left, so you don't have to take a whole lot of time. But do you see that, does this address those concerns for by right structures outside of the residential or commercial area?
I will humbly submit I do not know.
Thank you, sir. I knew this was specific, so.
Yeah, I think we'll get back to you, but I do think that if you have good mapping and kind of good data, the case-by-case mitigation measures to make sure that that individual facility is resilient should be rewarded with a price structure that matches. And if it's not resilient, then it should be priced accordingly.
No, that's excellent. The last flood we had in our area, the reason I'm asking some of this was 1969 in that specific area, but with GIS mapping, it said it actually wasn't a floodplain, so I didn't build anything there. But there's some other areas that we did not think would flood. I don't know if you guys know, in our district, we have 7 or 8 counties under FEMA. Michael put a punch to it on flooding there, destroying one whole town, right? So I don't know if they knew that was specifically some of those structures were in a floodplain, so that's why I'm asking the question. I know it's specific, and I promise this isn't Stump the Dummy, which when I get that when I was an intelligence officer, I promise it's actually a real curiosity question, you know, and if structures outside of those specific definitions would be covered with some type of change in the GIS posture. And, you know, and I'm just sitting here looking at it because there's millions of dollars of special use buildings in our district.
Well, the policy, the way it is right now, you have to have a policy on each and every building that you have on your land, which is ridiculous because it should really be based on your survey so that you cover comprehensively, completely. Even on residential homes, they would
you're
have
in my
to
head. You're exactly right. Yes.
Right. And so send me bourbon. But anyway,
yes, ma'am.
But then also on residential homes, they would have to have a separate policy for garages as well, so it's not included. So if they could change that and make it per buildings on the survey, then it's much more comprehensive and better coverage.
Thank you.
Thank you for the homework. I'm not going to try to answer right now.
And again, it was just something, looking at a structure, I'm like, my goodness, I'm not residential commercial, and I know about 50 or 60 businesses that are not either, and even outside of liquor, which I don't know if I can say in here, I think I can, but outside of liquor, beer, but you're also talking about wine, but you're talking about other structures that hold other things, nothing illicit. It's the 5th District of Virginia, but you know that's why I'm asking those questions. Yes, sir.
My agency is located on a barrier island in Southwest Florida, so we don't insure a lot of farms or farm-oriented businesses. And one thing I learned is don't try to become an expert in something that you're not.
Yes, sir.
I don't have an answer for you, but we can get one for you.
Thank you.
Not specifically to that. We will get you an answer, but we are also in support of the pilot program for policies for multiple ag structures. So, but we'll get a specific answer to your specific question.
And what you said, Ms. Guzman and Ms. Lamb, about the multiple structures used on by-right builds for specific types of industry, and I am talking tens of millions of dollars. And based on the flooding that we've had recently, there is a concern in the district about flood insurance for that specific idea. But I got 9 seconds. That was perfect. You guys are amazing. Thank you very much.
Thank you.
I yield my time.
The gentleman from Texas, Congressman Gonzalez, is recognized for 5 minutes.
Thank you. My question is for Mr. O'Mara. On page 7 of your written testimony, Mr. O'Mara, you stated that in addition, Congress should consider mapping beyond the special flood hazard area. Floods and risks do not stop at a line drawn on a map, which I can't agree more with, and many properties and communities outside of these areas are at risk of flooding. In fact, almost a quarter of all flood claims occur outside the risks of SFHAs. What additional features should be collected in addition to elevation data, or in a sense, what else beyond SFHA should we be doing?
Yeah, I mean, we want to see the state-of-the-art technology around LiDAR being used as the standard to do a map at the property level across the entire country. I mean, you know, when you have 3,000-year storms in 3 years, right? All of a sudden, like the traditional lines of the 100-year floodplain don't make sense anymore. And so for us, it's just the best data possible, as transparently provided as possible, so then folks can know the risk and make assessments, and hopefully there's some ability to then make much wiser decisions. And right now, when you're looking at topographic maps, in some cases, they're 10 and 15 and 20 years old.
Yeah, even older than that, I think. Thank you for your response. The next question is for Ms. Guzman. Ms. Guzman, in your written testimony on page 5, you state that NAR supports the following bill provisions, and which is expand mapping to all areas and risks in the United States, which I can't believe we haven't done already, and provide for digital display and property-specific mapping. What property-specific mapping are you referring to, and what attributes beyond elevation should be collected at the property level?
Well, not only elevations, but also to show the actual buildings that are on that plane or that location. Without that information, people can't, first of all, when we talk about smart and safe construction, there I said it, I get $1. With this data, they actually can go ahead and see where to build much more effectively. Now, if they go ahead and build in an area where there could be potentially high risk, they know that they have to do mitigation in advance so that there's low risk to the people who move in and also less risk to the taxpayer who may have to cover something in the future. But policyholders then go in with eyes wide open. They could actually do their due diligence and see what the impacts are for them to moving in there, and what the true cost of owning that property is going to be over a period of time.
Yeah. Thank you. Now, how far are we from this? If we all agreed today that, hey, we're going to begin, we're going to get on it, and we're going to do this nationwide, how long would it take
for us to be able to come up with accurate mapping?
No idea.
Really?
It's a resource issue. I mean, we could do it fast. I mean, like and a lot of states have great data. There's data across different parts of the federal estate and the state governments that have pieces of it. A lot of it's not interoperable right now. But I mean, if it was a priority that had a few dollars attached to it, it would be one of the smartest investments we could possibly make to make our country more resilient.
I agree.
And I believe also leveraging people that already have those resources, because some people are already actually doing it. So why reinvent the wheel and work with those who already have the data?
Thank you. Anyone else want to address the question?
The flood zone that is just outside of the special flood hazard area, the X-flood zone, is incredibly broad. It's defined by the NFIP as having a probability of flooding in any given year somewhere between 0.2% and 0.99%. So you have one flood zone that includes a structure that is 5 times more likely to flood than another. I mean, there's an awful lot we can do to improve, and the bar's not high to improve upon.
Mr. Amar, just going back to you said that we could do this really fast. How fast is that? A year?
I mean, so a lot of this is done kind of using technology, kind of flying over places, right? So, I mean, in the state of Delaware, we did the entire state in a handful of days. So,
oh, wow.
I mean, I think, and this is where working across jurisdictions to try to think about the best way to do it. But there are, a lot of states have the data, but do the quick gap analysis, see what needs to be done, what needs to be updated most recently, and you could be talking within a year.
Very good.
I would disagree that you could do it in a year. It took us.
So how long?
Well, it took us, it depends on funding. If you were to dump enough money into
Assuming
it.
the funding was there.
Assuming the funding was there, I would think it would take about 5 years.
Go ahead.
I would also caution that maps are a partnership with local governments, and local governments have to adopt them, so that the law actually has a built-in process for review and appeals, and some of those can take several years as well. So the hydraulics and the hydrology can take a long time, and then the review of the map can take a long time as well. It's going to be something we're not.
So how long? 5 years?
Potentially 5 years, but we have to keep going,
right,
because risk will change. So we have to keep going.
Right. I have areas in my district, for example, that are now flooding that weren't in the flood zone, and we have some that are in a flood zone but haven't flooded in over 100 years, and it's just really difficult to have to manipulate through that. Thank you. I yield back.
The chair recognizes himself for 5 minutes. Ms. Guzman, FEMA's issued a report not that long ago which indicates that incomes within flood zones, floodplains, tend to be lower than outside floodplains. Do the realtors agree with that?
Yes, this is true. First of all, because it is about affordability. So they're looking for something that they can pay for sustainably over a 30-year period. What's incorrect about this is that it's really not cheaper for them to live there. Number one, they're not getting the true cost of what that home is and what it's going to cost them over the period of a lifetime while they live there.
Because of flooding?
Exactly. So they could be out of pocket, and as well as their flood insurance rates are going to continue to go up as well. So to say that when we have an affordable housing, is it really affordable when your rates are going to be maybe $10,000 or $30,000 a year? That's not affordable, and that's not sustainable.
So is this not then, frankly, just more evidence that we're not producing or creating enough affordable housing in this country, that our housing stock is too low, especially in the affordable?
I think that's a local discussion, and you would have to go community by community to see what their efforts are.
But is it not true overall if we're seeing a disproportionate presence of low-income people in, quote, end quote, less desirable areas, namely flood zones?
Well, if we take Louisiana and the lower ninth, for example, many of those people have lived there for over 40 years, and many of them inherited property. So it's not necessarily that they were low income. They also inherited property, so they were there for a long period of time. So their risk was that they didn't get flood insurance because they couldn't afford it, but they already outrightly own the home. So we have to look at this from a community standpoint and go by every municipality or town and measure it that way. I don't like broad brush discussion on something like this.
Well, I do, and here's mine. We're not creating enough affordable housing in this country, period. And with that, I ask unanimous consent to submit to the record additional materials as given to the chair. Hearing no objections, so ordered.
I'd like to thank the witnesses for our second panel very much for your testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. I thank you again very much for your participation. Without objection, all members will have 5 legislative days within which to submit additional materials to the chair for inclusion in the record. And with that, this hearing is adjourned.